Yep.
What's up?
Hey, how goes it? How are you doing on this fine morning? Don't you just love when... Crappy. Don't you just love when the charts do...
I got stopped out of US.
No.
I just love getting stopped out.
Oh, man. And look at that bounce, too. You looking at the screen?
Oh, man. Hey, why is everything double? Everything's like, oh, wait, hold on. Oh, there we go. Never mind, my bad.
So I had, I was testing something out. So I had a stop loss that, with BTC and a stop loss with USDT. So obviously, primarily I trade with, USDT normally, but in this case, I had two stop losses. I also got stopped out with my USDT order. But I was actually, I got back in the second it bottomed out. Like the second I woke up, I re-entered. So I got to ride it back up. So I got stopped out too. It's not just you. I got stopped on the USDT one, and on my Bitcoin order, it didn't get stopped. And we've bounced right back up. But I got back in on USDT with Bitcoin going down. That one hasn't gone up as much as this one's gone up a lot because the price of Bitcoin just tumbled, while EOS has actually stayed constant. That's one of the reasons why I really love this EOS play that we've been in, because it's holding up no matter what's happening with the rest of the market. EOS is performing and it's following my TA on point. Like so far, I mean, look at that chart. Look at the Elliott wave count. I mean, it deviated a little bit there, like it broke sideways for a minute on that corrective wave, that subwave, but I mean, it's pretty minor.
Yeah.
Yeah, it was not a major deviation. Plus, my waves usually aren't, like, I don't really worry about timing that much, so sometimes it'll follow the same path, but it could be much further to the right or the left and not really that accurate timing-wise. I'm not really good. I haven't gotten timing down. I don't really focus a lot of energy on it just because it's not a priority. All right, well, let's get started then. I want to try to stick to my idea of having everything where it's more scheduled and whatnot. So I kind of, not obviously to the minute, but just as like a general guide, I wanted to come up with like a thing. 11:15 we do X, 11:30 we do Y. We'll see how it works out, and if we have to adjust the way I do it, then we'll make some changes. But I think it'll be much better this way. So let me pull up my other notes here. Let's do. Here we go. Desktop. And August 4th, Vader University. Perfect. That's what I want. So I wanted to get started with an overview of topics to be discussed, and premium members can pose questions that we'll address later. So topics I wanted to go over, since we have a bunch of newer members that weren't around earlier, when the market was doing a little bit better, we had a lot of plays, and not necessarily, I don't want to say my calls, but we as a group, we had a lot of plays that we got in together. We were pulling in 30-40% profits every day for a while. Things were going really well. It wasn't a bull market. It was still a bear market, but it just so happened the way the market was going and the way Bitcoin was running, it was conducive to a lot of altcoin breakouts. When the market's like that, with the way I trade, I can call those and spot those breakouts beforehand better than a lot of people. I've really kind of mastered that. When the market's boring like this, it's a lot harder, but I'll find good plays. I mean, we had GTO 2 weeks ago was a 45% breakout that ended up falling apart, and it didn't keep going as bullish and extended as I would have liked. And that's a situation where you really need Bitcoin, and you need the majors, you need the market in general to be able to sustain a run like that.
Use a push to talk?
Yeah, well, you were clearing your throat for 6 minutes, so that's what he's talking about. If anybody, Yeah, so
I just unmute. So
yeah, you can mute and unmute. With push to talk, you just have a button on the screen that says push here to talk, but it's not really an issue because we don't have that many people. Hey, with the coughing though, you can mute yourself for that. What was I saying?
I hope this is the big dump. I wish it was the big dump.
It's not, but I wanted to talk about that too. So yeah, when the market is like this and it's boring,
This would be
we
like,
can get plays like this. Like look
it's
at
in line with AMD's WXY count.
yeah. Well, I'm gonna go over that too later. So with the market being like this, we could still get great plays. I mean,
Bounce. I just wanted to crash.
do you have me muted?
43.
Do you have me muted? Can you hear me? Okay, so we have some plays like this that.
No, we can't. I think you're muted in the voice chat.
Oh shit! All right, never mind. I was wondering. I was like, that's so rude. I'm in the middle of speaking.
Yeah, I was wondering what's going on.
Yeah, what was
your mic was muted.
I don't know what the last thing you heard was then. Shit.
I just heard someone coughing.
All right. So anyway, I was explaining push to talk and saying that yeah, if you have to clear your throat, just leave yourself muted. But you got it. So I was explaining, which is obviously it was on YouTube, but now you'll hear it again. How lately it's been frustrating because I haven't had a lot of great plays, and I really would like to make some money. The plays that I have had that have broken out have done very well, so 30 or 40% on plays like GTO or a couple of the others. Civic had a great breakout where I made 20%, although that wasn't a play that we got into as a group really, other than people who were in the voice chat and the live streams know that Civic is my new favorite fundamental play. I absolutely love it. I just haven't had a good technical play on it where I would share it with the group and show you guys a chart based purely on fundamentals, though. I really, really like it, and that's something I wanted to dedicate another live stream to. The next one we'll do, I want to talk about just long-term fundamental plays. The point of me mentioning how the market is earlier when we first started the group and even for several months into it, the market was great. Like my style of calling breakouts was amazing because we could have days where we'd make 30, 40% profits on a lot of plays. And I was able to do that regularly, so I was making a ton of money. Now, with the way the market is, it's much slower and boring. Bitcoin's not giving us the stability we need for those alt breakouts to really flourish. So I've been focusing a little bit more of my energy research-wise instead of focusing on charts all the time. I've been looking at a lot of my plays that I consider good long-term investments, and I'm trying to adjust my model a little bit. So you have Vader's watch list where I talk about all my favorite plays and list my favorite coins that I invest in long term. I want to come out with a new updated list where I add or remove a couple things. And one of the most important ones I wanted to add was Civic. I really, really like it. And we can dedicate an entire live stream to talking about that and BTS and a lot of my favorite long-term positions. So that would be a topic for another day. I also wanted to go over in this one some of the stuff from the beginning. People who haven't been here from early on might not be as familiar with some of these concepts, and we haven't really talked about it as much. When the market's slow like this, it gives us a good opportunity to review different concepts that we otherwise might ignore. When we have exciting trading days, we're getting in and out of plays, we're looking for breakouts, we're constantly charting. Now it's kind of a lull, so we have certain plays. We have EOS, which obviously I've been very confident in since I called it 5 days ago. But we don't have a lot of plays where we have to constantly watch and chart and adjust, so we could take the time to work on these other things. Risk assessment is one of the things I would love to go over, how to figure out your personal risk profile and how to use that to become a better trader where you're not risking all your money, or at least you're not risking more than you should be risking. Investment goals are very important when you factor in those variables to try to determine what your trading style is or should be. And then you need to be able to optimize your market depending on the portfolio, or optimize your portfolio depending on the market. So I was explaining before how recently, since it's been kind of in a lull and we haven't had a lot of that exciting trading, I've been looking more and more into my long-term fundamental plays. And some people in the group said, I'm kind of not trading very much right now, so I haven't really been paying attention to your charts. Have you come out with any good long-term positions recently? And I haven't come up with new ideas. You're familiar with the coins I love long-term already, but Civic is a new one, and there's a few other ones I really like. But that's what we should really be doing. We should be working on optimizing our trading model and our trading behavior based on the current market. So we're as efficient as possible and we're as profitable as possible. And that's something that needs to be dynamic. You always have to be willing to make those adjustments. I've been doing it lately, and I wanted to talk about it with you guys so you can see when you might want to make those adjustments and how you should be doing it. So I'll briefly run through that. And then, we'll do a run through of the current market, take a look at Bitcoin, get an idea of the market at large. Bitcoin's dipping hard right now. Just had a big dump and sell-off. We have some major support. Not really at 6,800 even. There's more of a range there, which I'll show you on the chart in a few. We'll take a look at all that stuff. And then we can go over some other concepts you guys wanted to talk about. Does anybody have any questions? Not questions now, but topics that you might want to touch on at the end of this. I want to get a list now, and then we can have 4 or 5 questions that we'll address when we finish running through these other things. Anything you guys might want to go over or talk about? Topics or concepts, strategies, anything you're not completely clear on that we could spend 5 minutes on at the end of our discussion?
Ethereum.
You want to discuss Ethereum, what, as an investment?
Yeah, no, I'm liking it more and more along. They've got the Constantinople release. I mean, their news cycle looks pretty strong over the next 3-4 months.
Okay.
So they have a privacy, Mobius coming out, sharding. I mean, they have a lot of stuff going on with ETH that looks really bullish on the longer term. I mean, I could see it dump all the way to like even $200, but I can also see it after that going up.
All right.
A fair bit.
Yeah, okay, we'll come back to that. I'm going to do like 45 minutes or something, go over these other concepts, then we'll come back to these items. Anything else you guys want to come back to later on? We can finish this off with a discussion of our, whatever questions you guys have. Any other ideas? This is what I was trying to do for today, where I was thinking we could come up with questions now, and then at the end we could kind of go back and cover these questions or these topics. So, anything else?
Hi, Vader. Yeah, Vader. I get kind of still a bit confused with. I know you see your short-term plays, but when I don't follow for a few days, then I completely miss that, and I just had a quick look on short-term plays, and yes, I see. You call the break. That was great, but if you could sort of maybe then put a link to the live stream so we can follow it off or something, but I just, with no sort of context or reference, I see an image 5 days ago or something, and it's gone up good, but if I miss it, this is like the first time I heard about EOS now, but just because
really?
I'm doing it, so, yeah. But I'm on holiday, I haven't seen a few things, but I just quickly looked on your short-term plays and I saw the screenshots. Great, but I wouldn't. Yeah, if I have a bit of time in Europe where with time difference, then I can link it. I can go, oh, okay, yeah, he was talking about that on the stream, and then he put that short-term play with just a bit more context, a bit more information. Then I could I would have gone in, but I completely missed it until you said something like that, and that happens quite a bit. I just kind of have to sort of go through a few of the different crypto chat, private, dark side chat, different things to see sort of what's going on and catch up in some way. But I think there could be a more efficient way to catch up.
I didn't talk about EOS. EOS wasn't something I talked about in a stream. Like if I find a good trade, sometimes if we're doing a stream and I find it at the time, we'll discuss it. But in the case of EOS, I don't know if that was the case. I might have so usually what I'll do is I'll find a cool chart or trade opportunity, like a high potential play that I'm getting into. I share my own plays. I don't just give random signals. And I post it in short-term plays or Vader's posts. So it has nothing to do with like live streams. If I see a play that I like that I'm getting into, I'll post like I'm entering this trade right now on this coin at this price or whatever, and I post it there. So all you need to do is have notifications enabled for short-term plays and Vader's posts. As long as you have notifications enabled, anytime I post in those specific channels, any post I put in those channels is going to be information that you might want immediately to potentially know if you should get in a play or out of a play or finding a potential investment that I like. So Vader's posts, short-term plays, long-term plays. Nobody else can post in those, so you won't get 100 notifications. It's only me. So you might get 2 or 3 or 4 a day. If I find a lot of really good plays, I might post in there 15 times a day, but they're all relevant. Like they're all charts or actual plays or important updates. So you need to have notifications enabled, and that's all you need. If you have notifications for short-term plays, you would have gotten a pop-up every time I posted a chart for a potential breakout that I saw or something like that.
Okay, thanks.
So, yep, and if you need help setting up notifications or anything, if you don't see the setting, we could talk about it after or something. It's easy. There's a whole notification section. I think I did it in a video, but we could even do it at the end of our class here. We'll do, I'll show you the settings, exactly how to set it up, and then you'll know. You won't miss a thing if you have notifications set up.
Cool. I'm sure I can figure it out. I probably have to log off.
Because going back in, like having to go through all the different channels and try to catch up, that's impossible. You won't be able to. I don't even know how you've done it so far.
I'm thinking he might want. He's kind of wanting like a summary of kind of like all the plays you got going on, kind of like your watch list. Something you can just like pop up and look at what all the plays that are going on. What are the best ones you think?
Yep, there's no easy way to do that right now in Discord. That's something I might try to do on the website, the new platform we're working on now. It's probably, I don't know, maybe a month away. I got to talk to a developer, but so it's going to include a bunch of stuff. One of the things is I might be able to have like my watch list that automatically links to the TradingView charts and everything. So like it's constantly imported. Anytime I change the chart for anything on my watch list, it imports, and there's a whole list of like all of my current plays with the charts that I'm working on as I make changes live. That's what we're trying to do. I don't know if it's going to be possible, but we're working on it. That'll be a really cool way to get information out there faster. But as long as you have notifications set up on those channels, you will get a pop-up anytime I'm entering a trade and I tell you about it. There's sometimes I'll get into a trade and I don't post about it, but for the most part, I tell you guys like every time I'm getting into something. So anyway.
Seeing how this evolves, I think it could, like you said, with a website or something. I think for a lot of people like me, I think it could what the trades you're in and out of updated more and with summaries and stuff, daily, that would really help me, I think.
Well, for now, it's all there. Just like if there's 10 trades in one day and they're all in short-term plays or Vader's post, it's only 10 posts. Just look at those and you'll see whatever I've done on the day or what, like, But the most important thing is having notifications, so you're notified if I post a chart or something. So yeah, we'll circle back to that later. But any questions that we should add on to the end of this discussion, because I want to get on to the items in my schedule here. Any other topics you guys want to touch on? Stop losses, EMAs, understanding Fibonacci, basic trading strategy, long-term versus short-term. Anything you might want to focus on that we can come back to. Somebody give me one more topic to add to the list.
Maybe a strategy for the group based on, the big news is the ETF right now. And I think it's going to be delayed at the very best. I don't think it'll be rejected, but I think it'll be delayed. And they'll probably kick it and kick it and kick it. And there's going to be I'm thinking it'll dump right after a delay. And then there'll be some kind of a bounce. And then, I don't know, but probably a strategy of how to play that thing.
Okay, cool. I actually want to talk about ETC too.
Oh yeah, they got the news on the 6th or 7th. There'll probably be another tweet.
Yep. Yeah, I saw that. So yeah, BRSN is buy rumor sell news, just in case somebody didn't catch that. All right, so we'll go back to those topics at the end. All right, so the stuff I wanted to go over on this, we're actually miraculously pretty close to being on schedule, which is the first. Main topics for really introductory stuff that are important concepts to really know about. Risk assessment, how to build a portfolio, and your own risk profile. So we have, let me pull up downloads. Let's do, here's an example of a high risk profile. Well, not necessarily high. This is more medium high. I had originally labeled this high, but it's really more like medium high. So I developed this worksheet because it's helpful to visualize how you diversify your portfolio as well as how you should be diversifying your portfolio in case you need some adjustments. This will help guide you as to what you might or may not need to change. So I have for a medium to high risk profile, you want to diversify and make sure that you're not focused on a particular industry, a specialty within the space, or asset class, micro cap, small cap, depending on capital classification. But that's sort of more in depth. At a more macro level, understanding risk, you always should risk what you're willing to lose. That's the cliche we hear all the time. Don't invest more than you're willing to lose when you're talking about risky or speculative propositions. In crypto, everything is really speculative, but we also have a specific category of speculative plays that relative to established projects are the really speculative ones where you really have no idea if it's going to succeed. You can have a feeling, you could have some data that points you in that direction, but you can't be completely sure. The entire concept of investing in crypto is speculative by definition since it's a new industry and a new market, and we really don't have any sort of established data from a long enough period of time with enough people and enough data points to really know what to expect in the future. It's so young and it's so new. So it's important that you develop your personal risk profile. So when you debate whether or not you should get into a play or whether or not you should sell off or take profit or how you should use your stop loss strategy, you always have to factor in your personal risk profile. So if you are willing to take on more risk than me, you're going to trade differently than me. When people talk about getting signals, and you know how I hate signals groups, I think it's ridiculous, and I think it's horrible to take advantage of people like that, where you're telling them that you're going to make them all this money if they just trade the numbers that you're telling them to trade, when in reality, if they don't have enough people buying, it's not really going to go up. Those signals groups are nonsense, and they don't factor in all those individual issues. So you personally may not be willing to take on as much risk as me. You should not place a stop loss at 8% below your entry price if I post that, because you personally may not be willing to lose 8% of what you're investing. You might not be able to lose that much because you're not investing for short-term exciting gains. You're investing for your future, and you want to start putting some of your retirement fund into crypto because you think it's a very promising prospect. You certainly shouldn't be taking on the same risk that somebody like me is doing if I'm a swing trader or if somebody's a day trader. So you have to consider... Oh, hold on a second. Oh, Jesus, I thought there was a leak or something. You had the front door. My wife opened the front door, and it's pouring out, and I heard water, and I got scared for a second. I thought there was a leak. So yeah, you need to factor in your personal risk profile in every one of those situations. You can't tell people what to buy at. You can't tell people where to place their stop loss. That's one of the reasons I'm so adamant about teaching the way I do. When I teach my stop loss strategy and my risk mitigation strategy, I'm providing all the information you need to understand those methods and concepts and how to apply them to your own trading strategy, to develop your own strategy based on your profile and your personal risk tolerance. So that's something you always have to consider. If I'm entering into a trade, I'll tell you I'm entering a trade here. I'm placing my stop loss in this general area, but I'm not telling you to enter with me and place a stop loss with me. I'm telling you what I'm doing to offer you some guidance and offer you some input so you can try to develop your plan based on what I'm doing to give you some direction, but you certainly shouldn't be copying what I'm doing. And you shouldn't be copying what anybody's doing. That's not going to get you very far. You're going to be taking on, even if it's not more risk than you're willing to take on, sometimes you're taking on less risk, right? What happens if I post a play and say, I got into ABC coin with a stop loss at 3% below my entry, and then I get stopped out because it goes down 3.2%, and then it goes on a 40% run? Well, if I had a higher risk tolerance and I was willing to risk a little bit more, I might have placed a stop loss at 4 or 5% below my entry price. Then I wouldn't have gotten stopped out, and then I would have gotten that 40% run, and I would have had all those profits instead of getting stopped out prematurely. I might have ended up losing money in that case, and you could have made money if you didn't trade with me, but you traded based on your own risk profile. So that's important. You have to develop your profile and understand what you're willing to and what you're not willing to risk. That being considered, take a look at the worksheet, and I can give you guys an Excel spreadsheet without all this filled in, and you could fill in your own. So based on this personal setup, this would be, at the time, this is what I was setting up. All right, this is how I would set up my own personal profile. Where I'm saying, all right, I have high risk tolerance, so I'd put more into funds and ICOs and highly speculative positions. Where I'm also wanting to maintain an equal percentage of large cap, mid cap, small cap. I break that down. It should take into account your trading habits if you're able to perform general technical analysis. If you belong to research groups with helpful information, such as this or some other group, you may be able to succeed trading shorter term, that is on a swing or day trading basis, but it's very risky. Only the highest risk portfolios should have more than a 5 to 10% carve out for day trading. So this really factors in everything. Capital classification, how much money is behind the projects, what their market cap is. Different sectors, which people often overlook in crypto. Much like when you're investing in the stock market, you might want to invest heavily in energy companies. If you're betting heavily on the energy sector, you're going to want to get into energy companies like Tesla or Enbridge or whatever it is now that bought National Grid. Telecommunications, gas and oil. Well, I already said energy. What's another one? Technology companies, internet-based companies. So there's all these different sectors in the stock market. We have the same thing, and people just don't realize it. In crypto, we have exchange coins, we have the majors, we have currency coins, we have platform coins, we have privacy coins. Certain ones perform better than others. I happen to love platform coins if you're getting in the right platform. If you go back and look at what some of them have done, take a look at what Neo did, like 15,000% increase in a month. If you look at what the potential is for some other coins like Nulls, but if you look at the past to try to develop an expectation for what these future projects can do, Neo went insane. EOS went insane and made a lot of people a lot of money. Ethereum was the original platform breakout that went to the moon, and that's obviously a huge success story. ADA, so all these platform coins, some of which don't actually have or never have had an active offering and an actual product to offer people, have done exceptionally well. So platform coins could be a great entry into the market, especially for newer investors. It's not as susceptible to news and stuff like that because it's not like it's some ERC20 token, which I actually mentioned here in the description, where some of the news around Ethereum and ERC20 tokens with regulation and the SEC. The SEC can say they're deeming a couple ERC20 tokens a security. They halt trading, and then the entire market seizes, and there's all this FUD going around, and everybody's freaking out and dumping their Ethereum-based tokens because they feel like they're all going to get shut down by the SEC. You're not going to be as susceptible to that if you're getting into non-ERC20 coins. So if you're focusing on different platforms or if you're focusing on currency coins, you can avoid that type of FUD. Similarly, if there's bad news coming out about exchanges, a lot of exchanges are getting hacked. Maybe you're going to see KCS or BNB take a drop. This exchange coins here, it says BNC, that's supposed to say BNB. Maybe Binance coin is going to take a big hit. Waves or even BTS could take a big hit for the decentralized exchanges. Same thing. All it takes is some bad news to come out about something in that industry, and it could affect all those different coins. Same thing happens with privacy coins. There's some news that XMR and XVG have this big vulnerability, and maybe privacy coins aren't as safe as you thought they were, as you were led to believe. You might see Dash and Pivx and BCN take a huge tumble. So grouping them that way is a very helpful tool when you're designing your portfolio because you can make sure you're not overexposed in one particular sector. So designing your risk profile, we've got different sectors as far as almost like industries in the stock market. You have capital classification, which is self-explanatory. That's what the market cap is. And then you have your own personal trading habits and what you're willing to risk. If you're a long-term investor versus a short-term investor, that's a big consideration. So there's two possibilities. Either you're investing for the future and you're putting some of your retirement into crypto because you think it's very profitable in the long run. You might want to get into early projects that haven't gotten a lot of exposure and haven't offered any big developments yet. But if you do that with too much of your portfolio, you're risking way too much because those are all speculative plays. You're speculating as to whether or not those are actually going to become a company in the future. Like Flues is barely traded. They haven't launched in the U.S. We have no idea if it's going to be a successful product or not. So investing too heavily in it is going to overexpose you to that speculative possibility that it goes up or down without you having any sort of confidence that it's definitely going to do well because you don't have any data to base that hypothesis on. Then, on the other hand, if you were to just get into the more stable prospects like Bitcoin and Ethereum, because they've been around for a while and they're not really going anywhere, you're not going to be able to make as much, and you might expect a lot more modest growth because there's not as much exciting breakout potential as you'll have with those smaller coins that have a much smaller market cap already. So diversification is key for those long-term investors that are putting a lot of money from their retirement fund into this thing. You're probably going to want to get a happy medium that leans more towards the safe side. If it's your retirement, you need to make sure that money's available later. You can't risk too much. So your personal risk profile is going to be more more modest than mine. You're going to play it safe in a lot of cases. So when you're designing your portfolio and how to diversify it, you want to weigh your portfolio more. Oh, sorry, puppy. More towards longer term, lower risk, less speculative opportunities. And you can do so in a couple different ways. You could do that with capital class or with sectors. So the less risky ones are always going to be the majors. The more popular projects are going to have higher market cap. So if you're looking at across all sectors, you're looking at the ones that have the highest market cap, that are the most established, that are the least risky. You'll want to focus on large cap and some mid caps, but certainly large cap. So let's pull up a quick list just to show you, because I wanted to do this anyway and run through like the first page. Let's look at CoinMarketCap, and you can see the first page. Pull this up here. All right. Let's see. Oops. Okay, so here we have Bitcoin, Ethereum, Ripple, Bitcoin Cash, EOS. So you see all these billion-dollar companies. So large cap, even Dash, Neo, Monero, I don't consider those to be large cap even. Normally, large cap would only be the biggest, $10 billion and above. That's changed a little bit because I came up with this document. The worksheet was several months ago. At that point, there were a lot more projects that were over $10 billion. So $10 billion isn't necessary to be considered a large cap. I would say at this point, with the way things have changed, we could go ahead and say anything over $1 billion is now a large cap. And that has to be something you're willing to change. You can't just stick to that and say 10 billion is a large cap. So now we have a lot of coins that are large caps that have been around for a while that are very promising. I mean, even like Ethereum Classic, purely because fundamental news and or fundamental data points like is it available in multiple exchanges? How popular is it? Does it have real use cases? In the case of Ethereum Classic, they're going to be listed on Coinbase, the largest exchange and the exchange that's the most universally accepted to be legitimate and cross all their T's and dot all their I's legal. So the fact that they're listing Ethereum Classic should give you a higher level of confidence that it's obviously not some sort of scam coin. It has a very promising future. And the people who are deciding whether or not they should invite this project into their very, very exclusive list of offerings have done their due diligence. They know what they're doing because they're not going to risk putting some shitty ERC20 token on Coinbase. If they're putting anything on Coinbase, they're going to make sure that it's legitimate. They're going to make sure it's going to be stable and it has a very promising future so investors have an opportunity to get into something good instead of getting ripped off, feeling slighted, and then leaving Coinbase altogether. and that's something that a lot of people would do if they added some shitty token that caused people to lose a lot of money. So for that reason, Ethereum Classic could be a very good lower risk investment. The lowest risk are always going to be Bitcoin, Ethereum, Bitcoin Cash, even Litecoin, pretty much everything that's on Coinbase. Although Litecoin, not as much. I'm not nearly as bullish on Litecoin as I used to be. They haven't done anything great recently, and ever since the LitePay disaster, they've sort of been stagnant. They came out with this LitePay system that was supposed to be huge, and then it just completely failed in every way. The release, the PR and marketing was just terrible. It didn't work. There were issues where they were just getting manipulated by scammers, and the actual company got misled, and then Charlie Lee had to come out and apologize. Oh, we didn't know who we were working with. That's not going to make investors very confident if that's the sort of shit that you're pulling, or if that's the sort of shit that's getting pulled on you. So that being said, Litecoin, not too bullish on, but a lot of these are great. EOS, platform coin. Cardano, platform coin. You wonder why all these are a lot of these are platform coins, right? I was just telling you how platforms are some of the best and highest potential plays out there. Ethereum, EOS, Stellar, Cardano, IOTA, Tron, all in the top 10. So there you go. And then the rest, the second most profitable or high potential plays, are currencies. So you know I love DGB. It's one of my favorites. Bitcoin, Bitcoin Cash, and Monero for a more secure privacy coin, but also it's still for as used as a currency, but with privacy in mind. And then privacy is also big. So after the top 10, you'll see Monero or Zcash, XVG, which is I hate anyway. But these well, there's BitShares up at 22. A lot of these different sectors have different rates of success, and you can go and you could try to invest in particular sectors. But my recommendation is always going to be to factor in all of those data points: market cap, and what sector they're in, and what your personal exposure is or should be. So when you're factoring in the market cap, say out of these top 10, you want to have a solid half of your portfolio in the most stable and largest projects in crypto. The ones that are less likely to be affected by some piece of bad news or something like that. So normally I would have said over 10 billion, but now I would say anything in the top 10 is a safe large cap investment. Some of them I don't like very much. I don't like XRP, but the fact of the matter is people do. So I might not like it as an investor, as an analyst, as somebody who researches the technology. I may think XRP sucks, but the community doesn't. It has a very big following. So that fact alone is going to make it sustainable. There are going to be people that are never selling it that are going to keep buying it up, and they're going to constantly support it. So all that matters is how it performs overall. It doesn't matter what my personal feelings are, but given how I feel about it, I wouldn't personally get into it. Everything else in the top 10 is pretty much fine. I don't like Tron either, but then again, same thing. Large following, community, loyal following, and community. So Tron's most likely going to continue to do well, even if I choose not to get into it myself. I love EOS. I love Bitcoin Cash for its profitability and potential. Obviously, I don't like certain things about them. Roger Ver isn't the best guy, but like I've posted and talked about before, he doesn't care if you like him or not. His entire life and success is built around the success of Bitcoin Cash. So he's not going to stop, and he won't sleep until he wins, while the guys at Bitcoin have no personal investment whatsoever in whether or not Bitcoin succeeds or does well. So I'm willing to bet on the man. And so far, I've done very well doing so. Bitcoin Cash constantly outperforms the other majors, especially Bitcoin. When it goes on a run and Bitcoin goes up 5%, Bitcoin Cash goes up 10 or 15%. And with my strategy of using stop losses to mitigate risk, when it does come down and Bitcoin goes down 5% and Bitcoin Cash goes down 12%, I don't take the hit because I get stopped out. But when it goes the other way on the upside and they both move up, then I'm profiting more on Bitcoin Cash than people are profiting if they're invested in Bitcoin. So using these large caps are critical. And as I said, getting in, having a properly diversified portfolio with other sectors is critical. If anybody needs help figuring out the fine-tuning of their portfolio allocation and diversification, you can DM me and I'll help you figure it out. We can't spend 2 hours going through every little thing, but just coming up with general percentages and figuring out how best to diversify, I would be happy. I can't do it for you because obviously I'm not a financial advisor, but I can give you some direction and explain what these different concepts mean so you could more easily set things up yourself and get a better understanding of how it should be configured. And real quick, just to touch on, I'm going to want to change this. I'll give you guys an updated version of this, which factors in the new market conditions where large cap doesn't have to be more than 10 billion now. We can make it 1 billion, for instance, and then we'll do a similar adjustment with mid cap and small cap. So mid cap would be 250 million to a billion. Small cap could be 50 or maybe 100 million to 250 million, and then micro cap would be less than maybe 100 million now. And then ICOs and speculative investments, you never want to have too large of an exposure there. A lot of people would want to go all in with ICOs and highly speculative plays like Dan or Flues or even some of the other ones that are already on Binance that are established projects like Civic, which I really, really love, but it's a very low volume project, which means that at any given point in time, one person could sell off $50,000 worth and it would completely crash the price down 60%. And that's what can happen if there's not enough volume and there's not enough liquidity. That's why liquidity is so key. And you need to factor liquidity into your investment strategy as well and your risk profile. Because if you're getting into coins with low liquidity, you won't be able to exit them if you need to. And if you do exit them, sometimes that could cause the thing to crash itself depending on how much you're holding and how large your bag is. So that's something else. I think liquidity is a topic we can go over in an entire video. Because of how large a role it plays in not only designing your portfolio, but your training habits and what your expectations should be depending on what you're getting into. In a project like Scroll, the thing is taking a huge dive because there's no liquidity. There's nobody there to sell or to buy, and there's such low volume that it doesn't take very much activity to completely change the outlook and the price. So that is definitely something that you need to consider. Let me see. I have everything up I need. I spent too much time on that stuff, really. But all right, what else did I want to mention on that stuff? So yeah, determine your investment goals. Are you looking to for retirement stuff, shorter term trading where you're trying to make money short term, in which case you're going to want to take on more low cap, higher risk stuff because you don't need to be as worried about how much you're potentially losing. You could obviously risk a lot more, deeper stop losses, higher risk plays with speculative and low cap or micro cap plays. All that stuff increases when you have a higher risk tolerance. Then with a down market, how do you adjust and optimize your portfolio? So right now everything is bearish. When we were bullish, you could buy pretty much any alt, but if you knew which alts to get and you knew which projects to back, you could have done exceptionally well compared to other people that may have just eked by or made the bare minimum of what they could. At least, if the market's doing 10% every day, they can make 10% every day. But if you want to outperform the market, you need to be able to target your trading as opposed to just trading along with everybody else and hoping that what you're getting into is going to moon, At that point, it's not an educated guess, it's just a guess. So you need to make adjustments live in real time on occasion. Back at the end of last year, I bought a lot of stuff that was going up, and I didn't need to worry about my strategy all that much, although you always want to work on getting into the best opportunities. Now, in a bear market, you need to adjust your strategy, and a lot of people are still thinking, what should I buy now? What's going to moon? And that's great. You should be getting into some plays that you have a high level of confidence are going to do well, and if you're using a good risk mitigation strategy and using stop losses, focusing on USDT pairings, the sort of stuff that we work on, you can lower your risk to a point where it's a lot more manageable and in some cases pretty much gone. But you still have limitations, and on occasion you might get burnt even with risk mitigation strategies at play. Oh, damn it, my dog just peed on the floor. Hold on. Alright, well, I put a paper towel on it. So what sort of changes and optimizations would I do? Now that we're in a bear market, you really shouldn't be investing with as much short-term money and placing as many short-term bets. And that can happen going from a bull to a bear market. In some cases, you've heard me talk about how I've lowered my exposure and I'm not taking on the same level of risk because my personal circumstances changed. I now have twins on the way, and with the kids coming, I can't afford to take on the same level of risk I was taking on 3 or 4 months ago. 3 or 4 months ago, I may have gotten into a trade like Scroll, which is obviously a very, very high-risk trade because it's purely speculative. I'm basing it a lot on not the coin and the technicals itself, but the fundamentals at play with very influential people on Twitter promoting it and how that's going to cause the price to go up short-term, which obviously it did. So with all those things considered, I had to adjust my risk profile. I'm no longer willing to get into those sorts of speculative plays with all of my money. I can't put 30% of my portfolio into flues and 20% of my portfolio into Scroll because there's too high a probability that I could take a loss on it, and I can't afford to take that loss based on my new personal circumstances. So one of the main reasons you'll want to adjust your portfolio or your trading strategy is because of your personal circumstances, and sometimes it's because of what's going on with the market, and it's forcing your hand, so to speak. And now, where we are in a bearish market, you really can't expect to have breakout plays all the time. When we're in I don't need a bullish market, to be honest. To have a high level of confidence with the way my strategy works at calling breakouts and the indicators and tools that I have for spotting breakouts before they happen, I happen to be very good at it, and I've done very well in the past when the market was stable. I don't need to be in a huge bull run. As long as the market's stable and we're not in the middle of a big drop or a really bad bear run, I'll be able to get into very, very, very profitable plays at a pretty consistent clip. I mean, every day I should have a 10% breakout play without fail when the market is stable or going up. When we're very bullish, it's not even a question. When we're stable, I could easily pull it off too. And then when we're bearish, it's very difficult. I really have to look closely and find the right plays. And even then, a lot of plays end up failing even after they break out. I've talked about my GTO play a bunch where everything was perfect. The TA was perfect. It was following my plan, my model exactly. A lot of people in the group made money on it. It went up 45%, and then it failed. There was one day where Bitcoin took an $800 drop, and the GTO trade got stopped in its tracks and never recovered. It just kept going down from there, which is fine because I had a stop loss and I still made 30% profit on it. But I didn't make nearly the 100% profit I was expecting that I would have made in a stable market. So having that stability changes my trading practices as well. And now that we're in a much more bearish environment, I also wouldn't be taking on the same level of risk. And I'm not getting into the same number of breakout potential plays I would have otherwise gotten into. I'm looking more at longer term stuff, and I have no problem with standing on the sidelines, and neither should you. Everybody should be more than happy to stand on the sidelines and not get into any trades until they have something that they're very confident about. I had my money in Tether and I wasn't buying anything for 2 days until yesterday when I spotted, for a couple days prior until I found EOS, and then I got into EOS. Same thing with BTS 3 or 4 nights ago. I spotted BTS and I was very confident that it could go up. And I actually placed several orders without getting in because I was waiting for it to break out and give me confirmation. But I had a high level of confidence, especially based on the way both of those performed when Bitcoin and the rest of the market was plummeting. Everything else was going down at a very, very rapid pace, and those two happened to remain stable pretty much right at the same price with a slight deviation down or up. And based on that, I had a very high level of confidence that we were going to do okay with those particular plays. If I didn't have a high level of confidence, I wouldn't have even considered getting in because I'm not willing to take on that risk in this environment. It's just too hard to be right. Usually, I can make money if I'm right 10% of the time, but right now, with the way the market is, if I were to trade with that same aggressiveness that I trade during a bull or a stable market, I wouldn't be right enough to actually make it sustainable. So now I have to stand back and make sure when I am entering, I have a high level of confidence. And I had to make that adjustment because of what we're seeing in the market. So you always have to be willing to adjust and optimize your portfolio depending on your circumstances, depending on the circumstances of the market and the reality in which you're trading. Hey, no barkies. And the reality in which you're trading. long-term versus short-term aspirations, bullish or bearish market. All that stuff has to be taken into consideration. So right now, you should be looking for higher confidence plays. You should be limiting your exposure with every tool you have, be it USDT pairings and stop losses. And until we have a more confident market where we have a rational expectation that we're definitely going to go up, you should probably stick to plays you only have a high level of confidence in. But also plays where only plays where you can get in with a good stop loss. So if you see something that you think is going to break out, but there's no support below the current price, don't enter it. I wouldn't enter it. If I look at EOS and it's at $10 and I think it could go up to $20, I have a high level of confidence, but the next support below that $10 price is at $6.40. I'm not going to buy into it because I don't have a good support where I can place a stop loss. I'm only going to get into trades where I have a support close to the entry price so I can place a stop loss below that support, and then I'm able to expect some positive movement on the price action without getting stopped out prematurely, which is very easy to do, get stopped out prematurely if you don't have any support there. Because a candle might dip down and wick you out very, very easily when there's no support and there aren't a lot of orders to protect you. So that's something you need to factor in, and I wouldn't get into trades unless you have that confidence and unless you have that support where you could actually place an order that keeps you safe from taking a hit without exposing you to getting exited from the trade prematurely. So general investing stuff, how to optimize your portfolio, when you might want to adjust it, risk profile, anything that you guys want to know on those topics, anything that you're not clear on. I know a lot of it. You're going to have questions for me on the side personally because you're going to ask me for questions about your specific portfolio, but concept-wise, is there anything you guys need me to clear up? Oh, let me see here. What's this DM I got? What is... When do you know when to exit longer-term trades? All right, so if you're in longer-term trades, so if you're investing more long-term and you're not worried about short-term price fluctuations and you're keeping your money in cold storage, that's a very important detail, is when do you get out. If you don't have your money on an exchange, you can't have a stop loss. There's no way to do it. You can't place a stop loss order if you're not on an exchange where the order is placed. So you need to set yourself some rules. You need to look at what you're willing to lose. You need to look at what you expect to happen with the market. Anybody who says just hodl, and never sell is crazy. It's very simple. You don't have to sell. You can hold forever. But think about what's happening. If you hold forever and the price goes down, you're losing your capital, which of course you'll make back when it eventually goes up. Even if I have very high confidence that it's going to go up eventually, you're better off selling it and buying it back cheaper. There's a few reasons why I don't like to do that. There's security. There's the fact that you have to move it over to an exchange and there's some work involved and it might not be worth it if you're not really sure. And then one of the major reasons, what I've noticed in the past, when I do make that move and I decide to sell a bunch of things off, I never get back into everything that I was in the first place, which could be a good thing, but a lot of the times I really wanted to be in specific investments and then I just never get back into them. Because when you're buying back in after you've sold your positions, things have gone down more, and then you're re-entering those same positions. You're just going to alter it. You might be like, all right, I'm going to put more money in this one. Now all of a sudden you don't have money available to go into this other coin you really like, and it kind of changes your plan. You're better off having a plan and just sticking to it. I always say have a plan and stick to it unless you don't have a choice but to change it. And in those cases, I don't really change anything until I'm at the point where I just don't have a choice anymore. So that's a personal decision that you have to make on what you're willing to expose yourself to risk-wise. So if you're not very good at trading or if you don't have a high level of confidence in something long-term, you could obviously ask me. We could do some TA and see if we can get a better idea of what to expect long-term. But in the end, It's just going to come down to what you're comfortable with. If you're comfortable taking a little bit of a chance, it could pay off. It could pay off a lot. If you sell off BTS I sold mine at 27, I think 27K sats and bought it back at 20,000 sats. That was a huge play for me. I did very well on it. But a lot of my other stuff I didn't sell off. I wasn't that confident it would drop as much. Even BTS, I didn't think it would drop that much, but it did, and I ended up being right. But in a lot of cases, you might move something onto an exchange just to sell it, and then you'll realize it's better to place a stop loss. That's something else you can do, but you don't want to keep a large amount of money, a large percentage of your portfolio on an exchange. That's going to put you at risk. So you have to factor in a lot of those things. So generally speaking, you have two options. Hold no matter what, just hodl, as they like to say. I hate using that word, as you guys know. Or you can short it. I've explained before, when you short coins, you go to an exchange, you borrow 10 Bitcoin from them. They give you 10 Bitcoin, you sell them at $10,000, the price goes to $9,000, then you buy back those 10 Bitcoin, you give the 10 Bitcoin back to the exchange that lent it to you, so now you're even with them. But since you sold 10 Bitcoin at $10,000, you had 100 grand. Then when you bought back the 10 Bitcoin to give back to them, you spent 90 grand, so you walked away with $10,000 profit. You have a 10% profit, which you have to give a percentage of it to the exchange that lent you the coins to do it. That's what short selling is. You're selling coins that don't belong to you. You could do the exact same thing and short stuff that you own, which is what I did with BTS. I had a bunch of BitShares. I sold my BitShares at 27,000 sats. I bought it back at 20,000 sats, and I made a profit of 7,000 Satoshi on every one that I had. So I walked away with a 40% profit, essentially, and then I had the same number of BTS tokens. So if you have 50,000 tokens and you sell them at 20,000 Satoshi and then buy them back at 10,000 Satoshi, you now spent half the money you had on the original investment to get the exact same number of tokens back, and now you have all that extra money left over that can go into something else. The alternative is you get more tokens. So I did that with Flues. I had Flues earlier, I sold it and bought it back a couple days later, and I ended up with an extra 12,000 tokens or something like that by making that move. So that's the other option you have. You can sell and buy back cheaper, or you can just hold. And it just comes down to what you're comfortable with. If you know how to trade and you know how to predict what's going to happen and you have a high level of confidence that you're right and it is going to go down further, then it's probably a good idea to sell off and buy back cheaper. If you don't have those skills, if you don't have that expertise, if you don't have that confidence and those expectations, then you're better off just holding and you don't have to worry about it, especially if you feel like it's a long-term thing and you're comfortable not checking your account for a year. I can say I'm fine with walking away from my long-term portfolio for a year without looking at it one time and then checking it next year. I would be happy to do that. I have no problem doing that. I'm willing to take the short-term loss, have it go down and then back up again. But if I have the opportunity to sell it and buy it back cheaper, why not? Why wouldn't I do that? You know, I'm comfortable just holding it, but I'd be in a much better position to sell it and buy it back. And that's what I do in a lot of cases. So yeah, any other questions? All right, let's see. Let's see. No, I'm not talking about that now. Should we be more aggressive with the investments if the capital is low? All right. Somebody asked if you should be more aggressive with investments if you have less initial capital, and I wouldn't say you should change your strategy based on how much capital you have unless it's relevant. So for some people, if you put $10,000 into crypto, but you can afford to put a lot more, you're just getting started and seeing how the market works. Then you should probably trade the same way you would eventually with your actual strategy. I wouldn't adjust your strategy at all. If you're going to take on a moderate amount of risk, I would do the same with the smaller sum because you're just trying to gauge the market and see how your trading activity and trading strategy may work. But if you're somebody where you could only scrape together $1,000 that you're willing to risk, you're only willing to risk $1,000 because you don't have a lot of funds at your disposal. In that case, then you might want to be more aggressive because you're willing to risk it. You're willing to lose that $1,000, but you really want to build it into more so you can turn your entire crypto investment into some sort of some sort of impressive success story where you want to make 10x's and stuff. You're going to have to take risks. You're going to have to get into speculative plays. You're going to have to get into ICOs, or you're going to have to get into early projects. ICOs are difficult. Jen, you never got that P. You said you would get it. I just put a paper towel on it. It's sitting there. Yeah, so not necessarily ICOs. The problem with ICOs, especially if you don't have a lot of money up front, is it takes a long time to come to fruition. So if you get into an ICO, it may take 6 months before it's actually listed on an exchange where it's traded enough to go up at all. There were a bunch of ICOs I got into that still haven't listed on exchanges, and it's been 5 months already. So that's something you need to factor in. Getting into plays that are post-ICO stage but early in their project lifespan and haven't been listed on exchanges yet are ideal. That's why I love Flu so much. So with Flu's, you can get into this trade that's essentially like you bought it at the ICO because it's still around the same price. It's just like you bought it at the ICO, but now it's very close. It's only a month or two away from listing on major exchanges. So you just cut out all that time where your money normally would have been tied up. I still wouldn't put all your money. You don't want to go all in into anything because all it takes is being wrong once and you're completely wrecked and wiped out. But if you wanted to be more aggressive and say 50% of your capital goes into higher risk plays or speculative plays, that's something I think a lot of people would do or probably should do. If you're willing to take a loss and you're willing to lose that capital, but you desperately want to turn it into more, then yeah, you're going to have to be more aggressive and put it into those higher risk opportunities that obviously have a lot more potential for profit, but you have to accept the risk involved. Finding those sorts of plays are few and far between, but when you do, man, they can be really profitable. That's why I love Civic so much, because Civic is a trade that I'm going to get into probably more and more. I'm probably going to expand my portfolio more and more, my long-term portfolio, because it's very low volume and low liquidity now, but it's on Binance, so people are there. A lot of people have access to it. All it takes is some news. If they release a big update, if they get some sort of contract or partnership, everybody has immediate access to it. So people who are on Binance are just going to go and buy it on the spot. It's not like with Flu's where they're close to releasing and they're building up a larger following, and now they have some marketing going out, and they're trying to build themselves up right now, and they're not really available in any exchanges. In this case, Civic is available on the biggest altcoin exchange. Right now, it's ready to go. There's just no volume because nobody knows it exists. They don't do any marketing. They don't have a product. Although they do, people don't know that they do. All right. What was next? Do a quick review of the current market. Let's see here. Everybody left the voice channel because I was talking about boring shit. Nobody wanted to listen to me talk about risk tolerance and all that shit, but I told them we're going to go over the market and everything so they can come back. All right, let me get the charts up. We're going to do, I want to go through Bitcoin and the majors, and we'll take a look at some of the alts on page 1 on CMC and get an idea of what some good plays are. That's annoying. Everybody floods back. All right, last question on that stuff. For long-time holds, how safe is the Exodus wallet? I've never used the Exodus wallet, but it's one of the higher reviewed wallets. So, yeah, when I looked up like what the best wallets to use are, I haven't seen a site that didn't include Exodus as one of the top ones. It's probably good. I think having a Ledger or something like that is always going to be the most secure, but I don't do that. I don't use one. You have an iPhone. Your iPhone's very, very secure. So I have a couple different wallets that I use on my phone, but they're all protected by Touch ID or Face ID, and you have a backup recovery key, but you don't really need it because it's very, very safe and secure. So. So, yeah, I wanted to go over actual charts and plays and all that sort of stuff. So let's move on to that. Nobody else had any questions about the boring stuff, right? What, Jenny? Okay, so let's take a look and get an idea of the market at large. Let's take a look at the majors. We have Bitcoin, which is obviously down. But you can see, so we have some really strong support. Okay. We have really strong support, but it's like a little bit of a range. A lot of people are saying that 6,800 is the support. And you know what? I'm going to take a leak. Sit tight. I'll be back in 2 minutes.
Are you helping Papa work? Are you helping? Oh, you're so nicey girl. Roxy, you're so nicey. Helping Papa? Oh. want some healthy Papa work? You want healthy Papa?
Oh, Foxy Woxy. All right, folks. Here we got Bitcoin. Yeah, Bitcoin's terrific. It's just wonderful. It's the best coin. It's fantastic. It's wonderful. It's really great. It's everybody loves Trump. Bitcoin. It's really the best coin out there, folks. You know, folks, it's great. There's no Mexicans in Bitcoin. We need to build a sell wall. We're gonna build a sell wall, and we're gonna keep them out. We're not gonna let in Elmer Fudd and the trolls. We're not gonna let in the whales. This is going to be the biggest, most beautiful wall. It's going to be just fantastic and wonderful. Sell wall at $6,800. It's going to be wonderful. Just terrific. Like that, Winnie? Ow, no, don't scratch me, dick. My dog was scratching me. All right, so we got Bitcoin here. We're going to look at this. We're going to look at this chart, folks. It's a beautiful chart. We got this wonderful big red line here. I don't know what it means, but it's just terrific. We got a blue line there. I don't know what that is either, but it's wonderful. The green lines, totally good. I love green lines. It looks like money, and I love money, especially taking it from other people. So this major support, take a look at, like I was saying, everybody's talking about 6,800 being the support. In reality, it's a little bit of a range. So there's a difference between having support or resistance at those same levels, right? So in this case, we have 6,800 in the middle there, 6,841 to 6,777. And when we're coming down and it's finding a support, where is it? When it's finding a support, it dips a little bit lower to like 6,700 and whatnot. But anytime it catches resistance in that same range, it's up at 6,840. So you can see on the left there, each one of these instances where we caught a rejection, we got rejected, boom, 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 over here, right in the middle there. We broke out slightly there to the fib, but for the most part, we got rejected at that same price. A lot of ranging and stuff in this area as well. For the most part, every time we catch a rejection and we find resistance, it's at that the upper end of that support range, or that support and resistance range. In some cases, it's a little bit lower, but mostly it's the top line. Then when we catch support, where we see where we get more support, that tends to be at the lower of the two ranges. So you can go back for quite a while before this latest run, and you'll see that. So it's helpful to have a range as opposed to focusing on just a specific single line, especially since 68, while it is a major support, there are always going to be a lot of orders before or after it. Everybody's not going to congregate at that volume of other trading, or especially algo trading and bots that are doing trading there. So, all right, round numbers are not your friend. So that support is coming up. We'll see what happens there. It's possible we can bounce before then, but I think that's going to get hit no matter what. It's definitely coming down. The question is whether or not we get a strong support. Hey, no, stop. The question is whether or not we get a strong bounce off of that support. I don't think we're going to. I think we're probably going to break through. I've been expecting a leg up on BTC for quite a while. But recently, it's just been so hard. I don't know if we're going to be able to catch it. Stop. No. Playing and growling right in my microphone while I'm working. So I think BTC does bounce and catches another leg up. The question is when. So I think BTC should have gotten closer and possibly up to 9. Originally, I didn't. So if you remember, originally on this last run, I said we're going to get a $1,000, $1,500 run, maybe if we're lucky to the mid-8s, and then we're going to come back down. And that's what I still feel. I thought that was the case, at least, until very, very recently. Now with all the news that's coming out, it seems like somebody wants to push us up. So when you look at the various articles we've seen lately, we see Starbucks considering accepting crypto. Hey, no! We're seeing Starbucks potentially accepting crypto or Bitcoin, whatever. We're seeing updates on the ETF. No. Potentially the ETF, the Winklevoss brothers, they got rejected because who is going to give anything to the Winklevoss brothers? But there are legitimate the CBOE ETF and other investment houses that are trying to put out ETFs. They have a much better chance of succeeding. I've said for a while that I think that anything and everything is going to get rejected, and it's going to take the second round. So the way the timing will work out, say they get rejected right now, and then they have a second round where they could resubmit their application. Jenna, you can leave that, or should I do it? A second round where they could submit their application and try to get into it again, and then they have a better chance of actually pulling it off. I think that's probably more likely, where we see a rejection round one, and then we see them get accepted round two. However, there have been newer news articles that have been a little bit more on the bullish side, where they give us some reason to believe we might actually have a chance to do it. I'm not sure if we will. So I'm kind of playing it by ear. I want to watch and see how that plays itself out. But when you're seeing a lot of positive news like that,
there was the one bullish bit with the one commissioner who approved, who said yes, that was Trump's appointee, Hester or whatever her name is.
Yeah, I saw that. She said there's no reason why we should deny it. There's no reason not to allow it.
Right. Yeah. I mean, maybe it gets rejected straight up no, but they don't have to do anything for a while until like March.
Yep. Well, they also said there was a couple articles, one that said it's possible within the next 18 months. So, again, I don't think there's any rush to do it. I think, if anything, they might get rejected and then say, you need to come back and provide us some more information. We need a guarantee of this or that. We need to make sure that you're going to have the right security in place. So I think there's going to be something like that. They're going to request something. There'll be some reason why they're not able to approve it now, even if some of the panel does approve it. I think ultimately it is going to get delayed. It's still going to happen, but it's going to be delayed. So they had, Direxion was one. They already delayed them, and they're not going to make a determination till September. There was the Winklevoss one, which that one got rejected full on, right? If I recall correctly.
Yeah, and their appeal got rejected.
Yep. And then there was who was the other one? There were a few.
Yeah, that Winklevoss thing seemed total manipulation because they used it as bearish news, pulled the price down, and then they started printing all the Hester stuff, like, oh, here's this bullish commissioner, look at this, and then the price kind of bounced off of that news.
Yeah. So I think one of the biggest things, is there's a current investigation by the CFTC, the Commodity Futures Trading Commission. They're in the middle of an investigation into price manipulation of Bitcoin, and they're investigating the entire asset class. So if they're investigating the asset class, I just don't see them approving it now. So yes, it's going to happen. It is almost definitely going to be delayed for quite a while. Several months at the absolute bare minimum, and potentially a lot longer than that. So I wouldn't have any sort of expectation of it happening anytime soon. However, there could be something as simple as a news article that comes out that's positive, that sheds some positive light on it, and that might be something that gives us a little push. So I think the way the timing is going to work out, we're going to keep going down. Now that we've hit my main range, we're going to keep going down at some point. But short term, I think there could be another pump from all that news. We'll see if we get a bounce off of that support. If we get a bounce from this support range, the major support right here, roughly 6,800, I think it'll be a strong bounce that'll take us back up and potentially give us a double top at the same top in the mid-8s. Then we can go down from there. I just think that's more likely with all the promotional stuff, all the positive news we've seen coming out. It seems like the powers that be want us to be buying Bitcoin. They want to start repairing the market in some way, although they do more harm than done in the long run. But with a lot of stuff coming out like this, it usually seems it's usually a predictor of those who have influence wanting the market to stabilize or come up a little bit. So I think we will get a bounce and we will move up just based on this positive news. Overall, I still feel strongly that we're going to drop down. But one more bounce.
Oh, yeah, I mean, it feels like if I had a shit ton of Bitcoin and I want to just wear people out, you know, you just play it, you get people buying in now, like a little bit of positivity. Then you get a delay type of news, and you immediately start selling, first mover. Everybody starts dumping, and then you buy it up on that dump and spin the delay as positive because, it wasn't rejected. And then it comes back up, and then you just wear them out again with the second delay. Just think about how the retail investors are going to get shook.
Yeah, absolutely. On the other hand, if they give some sort of positive news, think of how it'll affect retail investors to bring them in. So there's a lot of potential there. It could have a huge impact. All it takes is one bit of news, and it could bring in a lot of those investors that have been standoffish because they have concerns about the legitimacy of the entire asset class. As far as a validation, there's nothing that would go further than allowing an ETF to go through or something like that, which brings crypto to a lot of those people who otherwise wouldn't have access. People who don't know or they're too intimidated to get involved in the market now. They don't understand how to even invest and how to get on exchanges. It's not that easy. I told you about clients of mine who got one of those scam emails that said, we hacked your computer when you went to a porn site. Now we have videos from your webcam along with this video of what you were watching at the time. Looks like you had a lot of fun or something. It's a ridiculous scam. It says, send us $3,000 in Bitcoin, or we're going to release it to all your friends and family from your contacts that we got from your computer. I had a client who called me, for those who don't know, IT consultant, network engineer and IT consultant. So I had a client who called me and said, hey, how do I send somebody Bitcoin? So I knew right away. I was like, did you by any chance get an email that said you had to send somebody Bitcoin? And he was too embarrassed to tell me. He's like, yeah. I said, well, don't send anybody Bitcoin. But that's my point. Is people don't even know how to do it. They have no idea how they would even get into it if they wanted to. Those investors, these guys with real money, if they have an ETF, it's very likely that they would enter when they otherwise wouldn't because they have no idea how to. And, of course, it legitimizes it. So that's a very real possibility. I could totally see that happening. I think either way it could have a very positive or a very negative impact depending on how the news is spun. Like you said, they can spin it in either direction regardless of what it is. People are already saying Starbucks and Bitcoin. Starbucks is going to use Bitcoin as if that's, Starbucks said they're going to accept Bitcoin. That's not true. That's not actually what's happening. If that was true, if they actually said, like, we will accept Bitcoin and Bitcoin Cash or something at Starbucks locations, that would pump the shit out of the market. And that obviously didn't happen. And it's hard to decipher what the actual news is when you hear, like, you see all these different videos or hear all these different people and articles talking about how it's something that's actually happened and it's some sort of positive news, when in reality it's not even remotely close to being at that point yet.
Right. I think they're just spinning them everything both ways.
Yep. All right, what else was on my list here for Bitcoin? So, yeah, factoring in the news and everything, it's hard because you don't know exactly what's going to happen. Plus, there's always the BRSN anomaly, right, where it's buy the rumor, sell the news, where the price, you always have to consider that part of what you're seeing in the price action is caused by rumors. And anytime there's positive news that comes out, you always have to expect a potential sell-off when that rumor actually comes to fruition. So that makes it even harder to plan. But you need to factor in all the fundamentals. They're just as important as the technicals. In this case, the chart's telling me that there's a major support right here And the way it works out usually more often than not is the news that comes out ends up matching up with what you expected on the charts. I always say it's amazing how that happened. Did you guys notice how they just released this news, or this negative news just came out right when I was expecting, when my chart was was calling for correction? Then they come out with some negative news or something. It always works out that way. They just sort of have this marriage, and they just move together, and it just sort of happens naturally, organically, without people directly influencing it. On the other hand, you can make the argument that it is people directly influencing it. It's because the charts are showing an expected correction that news is strategically released at that point, which is negative, which facilitates that correction. And in some cases will start it, and then the market takes care of it from there. So you have to factor in the news. It's hard to understand what exactly is true, what's bullshit, what's FUD, what's some sort of attempt to pump it, and all that sort of stuff. Based on the news we are seeing, though, just general sentiment-wise, I'm pretty sure we're going to see some more positive news come out and potentially start us in a little short-term bull run. I wouldn't say a short-term bull run. I would say a short-term pump, because it would go up and then end up coming right back down. It would just go up to potentially the prior top. If we get a double top, we're going to come right back down and crash through all those supports, 7,200, 6,800, everything. And we're going to go back down to where we should have, which is 3,000 to 4,000. I still think we're going to get down there, to be honest. I just think there's more support now than there was because of the news that's coming out short term. But medium term, over the next month, I fully expect us to make that move. We're going to have another strong bounce on the way down. So if we were to go out, let's do a pull out and do a widescreen view here of Bitcoin. This is always very interesting to look at Bitcoin from a wide angle. You want to zoom out and really see what you're looking at. And it opens your eyes because it shows you not only how insignificant the most recent corrections have been, but how much more correcting we have to do, most likely. Jesus Christ. All right, well, that makes sense. Hey, easy doggies. Let's pull up a cleaner chart, shall we? I like how all that stuff's... Hey, stop! All that stuff is in the red, and then our plays are nice and green. I always like that. We have EOS and BTS are doing well and holding up, while everything else is just dumping. Check out, look at that. Look at that. Who said that they missed out on the EOS play? And I told them they didn't miss out. My call's still good, and it's still early, and there's plenty of room to move. So we corrected here, and we're back up. Maxed out at 5.5 already, so we're up 4.5% already. Hey, stop! We're up 4.5% already. Quite a bit more room to go. We still have to finish out this wave before we correct again. On that wave 4 correction. So if we hit the top of this trading range, that blue line, if we hit the top of that range and come back down and catch a rejection, I would probably sell off there and then buy back after we complete that correction, because that would be a little bit deeper of a correction. We could even come down to this 9,800 level. That would be 5%. That would be worth it to sell off and buy back. It's definitely worth it. But keep in mind, what I expect out of EOS heavily relies on us breaking the top of that formation. So there's that wedge right here. That's been a trading range for quite some time. If we break the top of that range, then we're open to move big time. This count here was intended to be a very short-term count. This is pretty much the first wave of a larger move that I expect. This would be wave 1, and then from there I'd expect to correct, retest this line, which would then become a support further down here around 9,800, and then we move up from there into wave 3, and that would be a very strong and impulsive wave 3 that could carry us up to 13,000 sats potentially. So we'll chart that out and get a better idea of the longer term view on EOS. Again, that's heavily dependent on what's happening with the market. That's the other reason why I'd like to see a shorter term bounce on BTC from this news. If we can get that for the next 2-3 days, we can get some strong movement at a lot of these all plays, potentially bring in a lot of 10-20% movers over a couple days. That would be a nice way to inject some capital back in. Hey, no, stop, baby, stop. No, if you want to play, do it in the other room, not when I'm working. Okay, so there's that, and then BTS, obviously, I was saying also is doing very well, still at 3%. It's actually getting up to, yeah, it actually broke that resistance, which is beautiful. That's what I wanted to see. So that was the former resistance. We broke up above it a couple times, where to the point where I probably would have redrawn the top of that triangle as such. And we're back up above that. We're back above the Ichimoku cloud. The EMAs are converging and giving us support there. So I'm loving BTS right now. If you haven't gotten into BTS, it's actually a pretty good opportunity because we have a bunch of supports here. So if you were to get in now, this would be 2%, would take us to the 99. If you were to enter right now and place a stop loss below the 55 and the 99 EMAs, that would be a 2.7% risk. If you wanted to be a little bit safer, you could go below this segment of the Ichimoku cloud, which would be about 3%. If you were to enter right now, you could make that happen with 3%, where you'd be below the Ichimoku cloud, and that would give us additional support. So not only do we have the EMAs, but the Ichi cloud also gives us support. So if we hit the bottom, that would be leading span B. That would be another dynamic support in addition to those two. Not to mention, we also have the bottom of this triangle formation, which I'd also adjust down. We had a couple wicks that came down further, so I would move that down, which includes 1, 2, 3, 4 wicks. It's just that one that happened to dip down lower below it. So if I were to excuse that one, it would still fit perfectly, which I'm going to do. I think that it's good enough and it's a strong enough trend that I'd be willing to omit that one wick to make it work otherwise. So it's going to retest this again. It already came down and did that once. Probably has one more retest. So it could dip down a little bit further and test the top of that structure again before moving up. But I don't know if it's definitely going to. I just think it's a possibility. It's only like a 0.3%, so it doesn't really matter. If you were going to enter now, I wouldn't say it's worth waiting for a 1 more percent. I would just get in now, take a 3% stop loss risk. You're below the bottom of the Ichi cloud and the EMAs and the trend line support from that triangle formation. You have a ton of supports holding you up. So if you do get stopped out, and it's certainly possible that you will, it really has to come down. It really has to fail. So something to keep in mind if you're looking to get into BTS or if you're looking to get back into BTS, what have you. I would keep an eye out for that, or get in now and use a 2.8 to 3.2% stop loss. Limit your risk, minimal exposure, high potential on the breakout top side. If it were to go up, we could easily break out and get up to the 2,400, 2,800, or 24 to 2,600 sat range on the next. If this was just a single impulse wave and we had a 1, 2, this was a 3, that could carry us up to 2,500 just on wave 3 alone. But I'm in BTS as usual. I got a short-term play in BTS in addition to my longer-term play. So, all right, back to BTC. I wanted to show you a wide-angle shot of this guy. We can go out and take a look at the 4-hour, even the daily, but let's start with the 4-hour. I like this as a clean chart. I haven't used the Coinbase one. I do all my Bitcoin charts on the Bitfinex one. So now having this is so clean. It's like I get a fresh start without crap all over the screen. And I never want to delete everything on the screen either. I want to keep it there just for future reference. 5,800 is still the major support. Obviously, that's not changed. That log chart almost has a trend resistance there, but not quite. It's close, but not quite. So you can see there was actually really strong bearish divergence on BTC shorter term. If you check this out, Jen, can you take the dog somewhere? This is crazy. It can't work. Hey, stop, baby, stop it. Oh, that didn't actually start. Never mind. I thought this started moving down while this was still going up, but it didn't. It was already coming down at that point. Hey! Let it out. I know they're playing. I'm working. I don't mean Papa me. I'm trying to work and they won't shut up. Somebody's got to pay for those bully sticks. All right, so not just this. This isn't even the wide angle view I'm talking about. We've talked about this before briefly. If we go back and we look at the daily or the weekly, you can see how deep of a correction you could potentially get. So there's still a lot of room to move. If you look at the past, in 2013, especially the Mt. Gox drop, we had drops that amounted to like a 98% decrease in price. We're talking about massive, massive, massive losses. And we're actually not even there yet. Let's do this. Let's pull up. I've showed you guys this before, where you can see what you could potentially see, loss-wise. It's pretty epic. So this saw in the course of 2 months a 1,400% increase, followed in the course of a month down to $92, a 92% drop. So I think I've shown you this before. In 2 months, so in 2 months we went up 1,400%, and then in 2 more months we dropped down 92%. That was for a day, obviously. It bounced up after that. That was more of a flash crash when Mt. Gox happened. But even from there, if you extend it to this point, you still have an 86% drop. Now, the most recent correction is not that close. It's not that deep, not even close. I think at the lowest when it was at 80, I gotta check. I'll check right now. At 8,600. That's always kind of funny too. If you go back and you look at these and you see these individual moves, like this could very easily have been December till now. You see what I mean? Here, watch this. I'm gonna take a screenshot of this and show you. So this was 2013. Let's do this way. And 2018. See that? That's Pretty damn close. Pretty damn close. You can see this is even from just October was a 400% and change run. If you go before that, obviously it's considerably more. Let me do that real quick. That was from what, 7? That was from the middle of the summer. Was 1100 pretty much. So if you were to factor in it all, you're talking about considerably more. 2400. That was much more than the increase we saw. That was almost double what we saw in 2013, except the correction is identical in form. It looks pretty much exactly the same. So you can expect to drop down considerably after a parabolic run like that. It usually just takes a catalyst. Before, we had Mt. Gox as a catalyst. This time around, we've had all sorts of bad news. I mean, even this, you can see this flash crash right there on that 4-hour chart. That's kind of similar to what we had here. It was a really brief, but a very deep drop, and it was a flash crash that occurred because of the Mt. Gox FUD and the hack that came out. Everybody lost all their Bitcoin, and everybody instantly sold off. Then the market stabilized. That was also part manipulation. But now we see similar activity where there was an initial crash, and then we recovered slightly, and now we've double bottomed. So at this point, normally I would say, all right, with a double bottom, even if you include the latest 2, making it a triple bottom, you would say that that sets us in place to launch and move up back into a very strong bullish move. The problem is we also have a descending triangle, a lot of negative sentiment in the market, plus we never really complete our correction. So there's a bunch of different ways you could draw this. This really would be a 333 combo wave. So this would be a WXYXZ. No, not actually that. Hold on. It'd be more like that is going to be way down. I think I have to ask him, but I can't really. It's hard to see on this one. So expecting. What was I just going to do? Oh yeah, let's do this into the daily. Clean this up a bit. I did this the other day on a stream, in case you don't remember. Let's do a fib retracement. You can see right there. So there's no fib support at all. You're close to where we are right now. And the most realistic support that we're going to find is right here at 3,000. This is the bottom, why I say 3 to 4K. We could definitely go down to as low as 3,000 right here. But we have other supports. So we have some more support right here, which is, oh no, that's the same one. Sorry, over here. Yeah, so in the mid-4s, if you look closer, there was a lot more trading in the middle here, right where this bottomed out, because that was a strong support at the time. That creates a little bit of a range, which is going to be like 39 to 42. But the major supports are going to be at 3K, and then at 5, and of course at 4 at the even numbers. So let's mark off. This is going to be our long-term chart. So you can see and visualize it. Super strong support. 3,000 is just perfect. Nas, a couple other guys who are calling for 2,600, 2,800. I cannot imagine that happening. I think there's two major supports. In the case of 4,000, not only do we have trading activity in that range, but we also have a very, very strong psychological barrier there. I cannot see breaking too much further than 4,000 without a lot of people who already left the market, who are earlier investors who left the market, or people who felt like they missed out last year when everybody was telling them, and I was telling my friends, hey, you have to get into crypto, you have to get into Bitcoin. Those people all looked at it and considered it to be too expensive. We're too late to the party. We're not going to get in. Meanwhile, it was only $8,000 when I was $6,000 when I was telling them that. They missed out on an opportunity because they didn't listen. And if I tell them now that it's a good opportunity to get in, once they see that it's back down to even lower than it was when I originally advised them to look into it, a lot of those people and that entire class of people are going to buy up and get in. They're not going to want to miss their second opportunity to catch this market. So if you tell them we're going to go on another bull run, much like we did last year, they're going to consider it. They're going to consider it a must, so they don't miss out a second time. So I think 4,000 is going to give us a lot of buying from that sort of trading. Those people who don't want to miss out on the next bull run or felt like they missed out the first time and they wanted to get a second chance. And then if we do break that 4,000, if the technicals take over and we don't get our psychology and our fundamentals to prop us up, then 3,000 I don't see us dropping because that's a purely technical base. That's going to be the base support that's based purely on the technicals that I just don't see it breaking. And look how strong this was. This is for quite a while. We broke through on a really, really strong candle here on the daily. Besides that, we couldn't break through. We tried a few times. You could even consider these candles weak attempts because they got up to the high twos, even though it wasn't 3. But we had a ton of trading ranging just before we got to 3,000. And then at 3,000, we had incredibly strong resistance. It was harder than the 10,000 resistance. We had to test 10,000 more than we had to test 3,000. Or other way around. We had to test 3,000 more than we needed to test 10,000 before we could break through. And then, of course, this support was a really strong support because everybody thought we were going to drop back down at that point. But, of course, it held us up. Looking back on the daily, we have other supports. We have the dynamic supports with some of the EMAs. I wouldn't look at the 99 and 55. I'd focus on the 100, 200, and the 50. But we went parabolic and continued rising and never looked back. Now we're at the point where we're going to get in that territory and test out these supports. Without a doubt, 3,000 is the strongest support you could find anywhere in the lower range on this particular chart. You can look as much as you want from 4,000 to 1,000. You're not going to find a more ideal spot to bounce in 3,000. So my overall correction still stands. I've never wavered from that fact. I still wholeheartedly believe we get down to 3 to 4K. I'm just not willing to give an exact number until we get closer down. Once you get closer to that point, you could try to anticipate, use Fibonacci or look for other support and resistance and try to anticipate what the final bottom might be. Right now, I don't have enough data to really come up with a trustworthy and confident estimate. So for the time being, 3 to 4K, that's all I need to worry about. I'm not worried about exact pricing just yet, but I am curious to see when we catch a support and how much we bounce. I also don't want people to miss out on the market, which is why we have a trading strategy for the re-entry strategy, which includes using USDT pairs. So you never have to miss out on a potential run. You don't have to feel like you missed out while everybody else got in. You're also not taking on a lot of risk by getting in early, where you end up taking a huge, or the market takes a huge hit, and then you're regretting the fact that you entered when you did. If you have stop losses with a USDT pair, you're 100% safe because if you get stopped out, you're out of the market and you're not getting affected. So that's a tool you really need to utilize and learn to utilize if you don't know how to. It's absolutely critical. It's the most important tool you need in your arsenal while trading. So that's what I'm thinking for Bitcoin. We're still going to correct just as we've always expected, but we are going to get a bounce short term, I think. I'm pretty sure we're going to get a short-term bounce based on the positive news we've been seeing. Somebody wants us to bounce. Somebody doesn't want us to drop just yet. I'm not sure why, but I definitely see that happening. I think we're going to get a strong bounce all the way back up to the prior most recent top at 8,500.
Yeah, so I joined a little late, but do you think it would be a good idea to cash out the tether on this short-term run? I know some people are calling this like a wave 3 run, and then we're gonna get a 5 that's gonna break the 8,500. But I kind of agree with you that we're kind of just starting a new downtrend, and I was thinking I have long holds that I wanted to cash out on like whatever the next bounce was gonna be.
Hey, Jesus. Yeah. So let me show you that count. How that would look. It depends what your current status is in those plays. So if you have alts where you're up considerably, and you're dealing with all profit, you could take on more risk if you're willing to, because it's not like you're losing your original capital. That being said, you still need to maintain capital as much as possible, because that's more money you could reinvest to make more. So you don't want to risk too much, but you could probably take on a little bit more risk. If you stick to USDT pairs, you don't have to worry about selling out to Tether. So if you don't want to leave the market because you don't want to miss out on opportunities, but you also don't want to take on a lot of unnecessary risk, that's where you use our strategy. So right now, say you're holding ABC coin, XYZ coin, and DEF coin, none of which have USDT pairings, or maybe one of them does. You don't want to leave the market. You don't want to just get in Tether, because what happens if we go on another wave 5 run? We go all the way up to 10,000 before we correct, and you just missed out on potentially major, major profits. Right? That's the fear. Nobody wants to miss out. Everybody wants to be able to participate. The problem is taking on that risk. If you buy into new coins, or if you hold the coins you have, you might end up losing all of your profit back if there happens to be a crash one day. So you don't want to take on that risk. The solution is simple. You sell out of the stuff you have, and you get, instead of into Tether, you get into Tether paired alts. So if you find alts that you like EOS is something that we're very confident on right now, given how accurate my TA on it has been, and then you get into maybe Knowles or ONT, things that you like, you get into those coins with USDT pairings. And no matter what, you're not taking on any additional risk, but you're not missing out either. You've ensured that you're not going to miss out. You're going to participate in any run that comes, but if there is a drop, if we don't hit a wave 5 or catch a failure and we drop right down to 4,000 or 5,000, you're not going to lose any additional money because you're getting stopped out to Tether, which is where you were going to be anyway. So once you start considering if you should exit into Tether, that's the time when you should exit into Tether paired alts. That make sense?
Yeah, but is it so with the top of where you have wave 1, if we retrace below that right now, is that your exit all markets kind of like scenario where this whole impulse has kind of failed and we've officially started maybe like 5 waves down?
Potentially, and not really. So, I mean, that would constitute a failure of this Elliott wave count. I don't think that's likely, though. I think I'm pretty sure we're gonna bounce. We're getting support from the bottom of that Ichi cloud on the daily. I definitely see us bouncing very, very soon, if not already. But yeah, if we failed there, if this count was invalidated because we dropped out into wave 1 territory, I don't know if that would be bearish enough of an indicator to really expect that to mean we're just going to plummet. We still have a bunch of supports there and everything. But I'm unsure. And anytime I'm uncertain, I'll play it safe because I don't want to take on unnecessary risk. So my safe move, most people's safe moves would be to get into Tether where they know they're safe. My safe move is to move into tethered pairs. So I'm only risking 2 or 3%, no more. So I am uncertain. But we'll know pretty soon because this candle depends where this candle closes. If this candle closes above 7,000, we're good. If this candle closes below 7,000, I probably would have more reason to be bearish. But right now, it's looking good. Right now, I think after the drop we took today, we're finding support at 7,000. I think we're going to pop up.
So one of the things that I think is a little different today when I was looking at the charts in the morning, so Bitcoin is finally, you guys might have talked about it already, Bitcoin is dropping a lot harder than pretty much all the major alts. And it's like, if you look at stuff like, EOS BTC or Ethereum BTC, those charts are going up. The coins aren't going up against USD. They're kind of going down a little bit, but they're holding relatively stable to Bitcoin. and so their pairings are going up against BTC, and I'm wondering if we're really on kind of like the verge of like a mini alt run.
Yeah. Well, I wouldn't expect a real alt run until the market stabilizes and Bitcoin stabilizes. So there could be little mini runs. We've had a bunch of mini runs, but we haven't experienced an alt run since the end of last year. So I wouldn't go that far to expect any sort of alt run. I mean, it's certainly bullish to see certain coins outperforming Bitcoin. That's always a good sign. But it's when you say alt run, I'm thinking 2017, every day 10, 15, 20% on 50% of the coins. That's the alt run. But simply outperforming Bitcoin in shorter terms, it's not something you should be that bullish over. But it's always a good sign to see that. I stick to individual charts or individual plays, and I don't factor in outside variables from other coins as much. I'll factor in my overall trading strategy. I'll factor in fundamentals, technicals, psychology, people, everything. You know that. Every single piece of data I can get gets factored into my model and my strategy. But the charts themselves don't really matter. Like if I'm charting out an alt, I'm not going to care what Bitcoin's doing when I'm charting that specific alt. I want to see what the technicals say, and then I may factor in some of that other stuff. And when I factor in all those things, my overall view right now on these alts is that they have potential to make strong moves, but only as long as Bitcoin is stable or moving up. If Bitcoin's going down, then a majority of alts are going to go down, and we're seeing that. We're not seeing a majority of them go up. We're just seeing some of them go up. So I don't see it as that bullish as what you described. Huh?
Ethereum and EOS were both heavily oversold. That's why they're holding so strong now.
Well, there's several. The technicals for EOS looked great, and that's one of the reasons why I've been backing it so much. And same with BTS. Of everything I was watching, those are two of the most bullish looking charts I could find when Bitcoin was correcting and coming down. And if they're able to outperform Bitcoin to that extent, where Bitcoin's coming down and those are showing me more bullish signals than any other alts, then I'm going to have a high level of confidence in them. But overall, I don't see the alt market in general outperforming Bitcoin right now. I mean, most of them are down. There's some of them. It's some of them are up, but a majority of them are down. So I don't think it's as bullish of a setup as you think. But like you said, if they're all outperforming Bitcoin very strongly, then it could be a mini alt run, sure. But I just don't see that happening right now. I mean, look at CMC. Very few are outperforming Bitcoin. As a matter of fact, how is EOS not outperforming Bitcoin? It was. Yeah, I don't know. I don't know where they calculate that from. That 24-hour count on a CMC, I think that's bullshit.
Yeah, no. EOS BTC is following where that wave count from the other day.
Say again?
EOS BTC is following your exact wave count from the other day so far.
Yeah, I know. It's been on point. And for those who weren't there when I first spotted this, so this chart that you're seeing now was what I shared as a with an EW count. Originally, it was just the bottom and that bounce that I had modeled that was on point. That's why I have such high confidence in my TA specifically for EOS more than anything else right now. Because my confidence was weak based on how everything had been trading. I couldn't really seem to get a grasp on a lot of these plays. A lot of them just were dropping even when the TA was telling me they would go up. And then when I spotted EOS and I saw that initial bounce, I had a lot of confidence that it would continue along that path, and sure enough, it has. So let me see here. I'll show you. Find this other chart. Oh, Andy just said, why ETC not going up fast? Why ETC not go up fast? I think that's old. I think I already overshot it. Here we go. This was on August 1st when we did BTS and ES. So we're not chasing pumps where we saw it break out and then we jumped in. You know, this is something we spotted early on. So that was after it bounced. And before it bounced, oh, I know why. It's over here. There we go. Yeah, I'll be done shortly. So here's what I spotted on EOS, right? So we have this trading range, this falling wedge. That's why I said the top of this wedge is so critical. If we break out of that, we're talking about a big extended breakout run. So we had the strong trend line. We had prior falling wedges that always broke out nicely. We had a falling wedge in this case, just a much larger one. This falling wedge, and we had bullish divergence at the time. And it was very, very oversold. It was really low. That's what Nils said. It was oversold, along with Ethereum was also oversold at the time. But so yeah, I had a high level of confidence in the reversal and the bounce, and sure enough, we got it. So that was on point. Ever since then, it's been pretty damn accurate, my my ES chart. So I'm very, very happy to follow that. This was July 31st, a day before it broke out. But you can see another falling wedge here. And a nice strong reversal anticipated with the RSI. I mean, you can see really, really strong bullish divergence on the RSI. So that that bounce and that support was totally expected. And after we did get the bounce off of the bottom of the main falling wedge, we've done well ever since. So in this case, we had gotten the first bounce right there. That's why I was bragging, just joking. And since then, it's been great. Moving forward, again, it is heavily dependent on BTC. The only thing that could take it down is BTC. However, it has been trading independently of BTC. The fact that it's not tied to the majors and the overall market performance leads me to be even more confident, as we usually are. When you have BTC coming down and there's 3 or 4 alts that are staying either stable or moving up, those are the alts you want to watch for potential strong runs once we recover. Because once Bitcoin stabilizes and there's no longer any sort of sell-off market-wide to pull you down, if you're free of that influence, you could really run. So if the timing works out well enough, if Bitcoin stabilizes or moves up, and we go on a short-term run because of all the bullish news that we're seeing, that might work out where it's timed with our intersection with the top of this falling wedge. If we can break out from this trend, like I can see a very, very significant run for EOS. I mean, it had been correcting for so long and got so low. It's such an overall bullish project with the way it's typically traded. It's unusual to see it correct that long and hard and deep. So I think we're in for a really big treat, but we do need to break that resistance. If we can't break that resistance, we're just going to end up coming back down to test the bottom again, and that would take 2 more weeks. That's why it's important that you have your stop losses in case that does happen. I wouldn't put this in cold storage and say, all right, you know what, this is a longer term play because Vader said it's going to take, another week to come to fruition. It could very easily fall apart if it gets rejected at the top of that trend. So it's something to watch. We're getting pretty close. We're only, 2% away from there? Let's see. 2.5%, and we're getting close to that test. So if we can get another couple candles like that, some really strong candles, we could easily test it today. So it's important to watch that closely. Make sure you're on top of it, because if we miss out, if you're not paying attention and you don't have your orders in place, that could be pretty dangerous, because if we do fail to break out, it's going to be a strong correction. What I think is going to happen is we're going to hit that, reject a little bit, come back down, get wave 4. If we're bullish enough, like the way we're trading today, wave 4 is not going to be so strong. Wave 4 is only going to correct down to 99.5 or something like that. It's going to be a shallow correction. When you're this bullish and you're seeing huge green candles like that are carrying you up 4 or 5% at a time on the hourly, you should never expect to get a deep correction. In most cases, you're going to have a really shallow correction of 2-3%. You're not going to see a 7 or 8% retracement. It's not going to happen. There's too much bullish activity and momentum to carry you. The only way that's going to happen is if it also coincides with a market crash or some sort of negative news, change in sentiment, something like that. So unless we get something like that thrown at us, my level of confidence on EOS remains exceptionally high. I'm also very confident on BTS. It's been doing, also following my TA pretty accurately. This count wasn't intended to show because I knew we weren't going to break out of that triangle yet. That was just an example of what we could see. So with the triangle like this, we need to break out of the top with some force. So at this point, we wicked out earlier, but we never really got out with this much force where we had multiple hourly candle bodies. Now that we do, we've had the latest one catch a lot of support from the top of the Ichi cloud, which also is the top of that triangle formation. I'm pretty sure we're above that now. So if you wanted to enter right now, like I said before, it's gone up a little bit since we originally talked about it, but you can get down below all of these supports with 3.25% risk. If you're not willing to take on that much risk, and this goes directly to what I was talking about earlier at the beginning of the stream, when you're coming up with your own personal trading strategy and risk profile, you need to factor in what you're willing to lose and what you're willing to risk at any given point in time. So right now, if you're not willing to risk 3.25% of what you're investing, you could limit your exposure to only 1% or 1.3%, because you do have a support here at the top of the Ichi cloud with the top of the triangle formation. If you consider that a valid support, you could potentially place a stop loss at 1% below the current price and enter with almost a risk-free trade off the bat, because 1% is pretty much like non-existent risk. So if you consider this region a support region, you could buy now, place a stop loss at 1% down from there at 23 sats below the current price at around 22.15. And then as soon as we get a strong candle up from there, you can move your stop loss up to your entry, and then you'll be completely risk-free. But I wouldn't do that until we have a new established support. You don't want to just move it up randomly. You don't want to arbitrarily move up your stop loss. You want to wait till you have an established support. You want to have the cloud or one of your dynamic supports with a 55 or 99 EMA, or you're going to want to wait until you break something like right here where we had a few rejections. That's a potential support and resistance zone. So at 2260, that could be a good support if you wanted to wait till you break that and then place your stop loss below that. That could be a good one. Beyond that, I'd have to go back and look at earlier points. Let's see, 2260.
So I threw a BTC count that I've seen floating in other places too. I put it in the member section. I just wanted to know if you could look at it and see what your thoughts on if that's how you kind of see it coming down.
Yeah, we could do that. $22.50 would be a better support than $22.60, actually. We'll take a look at that after. Let me just finish. Let me go through my notes and see what else there was that I wanted to talk about before we move on to that, and then we'll go over any other TA. If you guys want to look at other coins, we could do everything else. Let me just make sure there was nothing else I needed to go over. Yeah, I ran way over. So market review. So we've gone over risk mitigation strategy. We've gotten back to that. Using support and resistance to identify the best entry or stop loss. We've done that. So, yeah, okay, that's it. I guess we did cover everything that was on my schedule, so that's that. Clapping for myself because I actually stuck to a schedule. Answer questions submitted at the beginning of class and other stuff. So we'll go on to, I'll check the member TA section in a second. We had review ETH, discuss longer term potential. We already went over the ETF and all that news, things like that. Let's do a quick check of ETH really quick, and then we'll go on to everything else. Got stopped out on a Neblio play last night. I don't know if you saw, I posted, I must have not saved it. Oh, wait a minute. Okay, yeah. So here I have a new entry because we got the failure. I got stopped out last night. And look at that. Look how on point that new entry was. So I said this would be the new entry because I had to wait until we cleared some sort of resistance because that would then become a support, right? So I didn't want to enter back into this trade until we would have had a support. And check that out. I spotted this as that was my new entry price. I posted this in the short plays section if you guys didn't see it. I said this is my new entry. This is where I would re-enter the trade after getting stopped out. And that was pretty much over here when I said that. We were still trading in this area. And then look how close we got. Like just below that new entry price. So my order didn't fill. Luckily, because if it did, it would have filled and then came right back down again. So it's really important to place your entries accurately. You need to know how to spot support and resistance. If that's something you guys are weak on, like I keep saying, just talk to me about it, and we'll do a dedicated session talking just about support and resistance and how to identify them. So anything you're not clear on, we can work on. In this case, I managed to place my entry order, my new buy order, at 3666. So 14 Satoshi above where we ended up wicking out to right here. So 0.4%. So that's pretty on point. And the reason it was so accurate is I factored in the top of this prior formation. I looked at the 55 EMA, and I gave myself a 20 Satoshi gap on top of that 55, more like 30 sats. And it worked out very well. So that's important, and this is a perfect example of why you have to spend time on support and resistance before anything else. I posted on Twitter, stop wasting time studying Fibonacci and Elliott wave and just focus on learning support and resistance. And somebody said, don't put down other strategies just because you don't like it. And I was like, well, I'm the one who always says you should use everything. I'm a Fibonacci and Elliott wave trader myself, so I'm not putting it down. I'm just saying don't spend time trying to learn it before you learn the basics. You need the basics to build upon, and you're not going to successfully use any of those strategies unless you know support and resistance. You're not going to be able to use Fibonacci because you're not going to know what to look for. You're not going to be able to use Elliott wave because you're not going to know what the highest probability is as far as retracement levels. So support resistance, critical. Neblio, perfect example. I still like this for a potential move, but we need to get above that rejection point first, that resistance, the bottom of that Ichi cloud. We have to break that before we can get in and have any sort of confidence that we're going to break up. So just something to watch. So I wanted to quickly look at ETH, so we could do that. Let's highlight the trend line on the RSI. You see why that's relevant, right? So, a strong upward trend in the RSI along with a price action trending down. So that was some bullish divergence. I'm sure you guys spotted that, right? Even take a look here. You can see an extended bullish divergence there. We finally get the reversal, come back down and retest. We didn't actually have to retest the bottom, although we may still. I think that's going to depend on what we see with Bitcoin, whether or not we get the support from Bitcoin's bounce zone.
$400 is a very hard resistance or support for Ethereum anyway.
Yeah.
If Ethereum drops below 300, many miners will shut down their rigs.
Say that again?
If Ethereum drops below $300, many miners will shut down their rigs. Then Ethereum would be really in trouble.
Yeah. You think 300 is that level?
If it ever goes to 300, at 300 you really lose money, even if your electricity almost costs nothing.
But don't they adjust the complexity when that happens?
No, it's still going up and up and up and up and up. Just slower.
Well, that is a very, very important detail to consider.
Especially on the mining coins, yes. I mean, Ethereum will introduce Casper, hopefully soonish, when they jump to proof of stake, or it's a hybrid of proof of stake and proof of work. I consider when that's going to happen, you see a big jump in Ethereum price.
So you think we're going to see a big jump in Ethereum, you said?
I'm super bullish on Ethereum. I just jumped in Ethereum, I know, a couple of days ago. Okay, lost 10% since then, but just trying to buy more. I consider it's really bottoming out at the moment. If we can hold the resistance at 400 for a while, I don't see any reason why it shouldn't go back up. And we have seen that actually last Christmas or around Christmas, where Bitcoin was spiking and Ethereum was just still around the 400. And when Bitcoin was coming down, Ethereum suddenly exploded. So it's somewhere like a couple of weeks behind Bitcoin.
Okay. We were trading Ethereum at that point, but I just haven't been for a little while. I'm still holding it long term. It's the only major besides Bitcoin Cash that I hold, as you know. Besides Ethereum and Bitcoin Cash, I don't touch Litecoin anymore, and I definitely don't have any Bitcoin.
Since the mining will end soonish, at least for the alpha rigs, I try to accumulate a bunch of Ethereum before that's going to happen. Because then I have to look to mine something else like Monero or Zcash.
Yep. All right. So overall, I'm gonna write that down and give everybody a good idea of what some fundamentals are to consider with Ethereum. So what would be your top reasons if you were explaining it? I'm gonna write this down. What makes you the most bullish about Ethereum, Nils?
I mean, in the long run, Ethereum, we haven't heard any major news, let's say in the last, 3-4 months from Ethereum. So there must be something going on and something is going to happen. The latest news I heard from the fundamentals is that they want to put 2 upgrades to the Casper and Charlie.
You're breaking up. Hold on, you're breaking up.
Oh, sorry. So what's on the roadmap for Ethereum now? They actually want to have 2 upgrades. One was Casper, which is proof of stake, and the other one is sharding, which basically addresses the scalability issue. And
what is that
I'm
called?
wondering if they do sharding. It's called. It's something like
Lightning Network for Bitcoin. So it's addressing the scalability issues.
Yeah.
So it's basically similar to Lightning. It's a little bit off-chain scalability improvements. But now they were talking recently about that there's good reason to combine those two updates. So it might take a little bit longer, but it will happen this year still. And I mean, when the mining stops, they want now also to change the proof of stake concept. So you basically can create your own masternode, although they don't want to use that word in Ethereum. They want to use, actually you only need at the moment, if you want to buy up to 32 Ethereum, you would basically qualify for masternode. And at the moment it's pretty cheap, so you're somewhere $10,000 and you basically have a nice proof of stake mining rig. Yeah. If you consider what many people were buying in graphics hardware, 10,000 was not really much to build a miner. I know, I read a little bit in there. Besides that, Ethereum went down quite heavily since the beginning of the year. Yep. And $400 is a very strong support. It was basically the high before Ethereum jumped off before Christmas or around Christmas. It was an all-time high at that time. And every time it tested the 400, it popped up again.
Yeah, I mean, it hasn't really wanted to break 400 except for when it was at, 360, it looks like, over here.
Yep.
Since it went down to 360, it hasn't dropped.
With the increase of difficulty, I mean, Ethereum will die if many miners will shut it down. What is actually concerning hell of a lot of other coins, I mean, many of all the others are still running on Ethereum platform. So if Ethereum would basically shut down because the miners shut it down, a lot of your ERC20 token will be worthless because you cannot trade or transfer them anymore.
Well, they would still, it would just be much slower, but it would still be up and running. It's everybody's not going to shut down.
Have a running platform.
Huh?
They wouldn't have a running platform. It's the same thing as if you.
No, they're not. Every single person who's mining isn't going to stop. There's going to be a lot of machines that are still running, that are still mining. It's not like that. It would be much more expensive, and it would be a lot slower because there wouldn't be nearly as many miners. Oh. Yeah, but Ethereum's not totally collapsing.
No, I don't think. And we're so close on this mining brink at the moment. It's $100 plus minus. That I only see one direction. We see that going up.
Yeah, but as the potential reward, the profit margin for miners goes down, less people mine, mining difficulty goes down too, right? So then the people that stick in the game, they're able to mine cheaper, right?
Not on Ethereum. It might drop immediately, adjusting the scalability, but going up and up, difficult.
Yeah. So that like sliding scale of difficulty only applies to Bitcoin mining.
Still there?
Yeah, this is actually. I mean, Bitcoin mining is adjusted, I think, every 2 weeks. The difficulty, and Ethereum is. I think it's much shorter. I know what the real block time is when it adjusts the difficulty. But overall, this ice age is still in place. So this difficulty bomb they had in there is still in place. It means that difficulty has to raise. They just dropped it once, but they also reduced the block reward. And that they did, I don't know, somewhere beginning of the year. But still, the ice age is still in place, so it will get harder and harder to obtain more of the Ethereum.
Yeah, and I think I agree with you that when we do see prices like $3,000-$4,000 Bitcoin, a lot of the ERC20 tokens that are currently trading are not going to exist.
Let's see.
I was just recently looking at my portfolio from January when I was still following what is Cryptos R Us.
What was it?
I just looked at my portfolio from January when we were still members of Cryptos R Us.
Yeah.
I think I have something like $3.5 grand something like, I don't know, $80.
Huh.
Really amazing.
That's great. Let's see.
So every time somebody tells you hold, just hold his neck and punch his face. It doesn't make sense to hold
Yeah,
for long
that's
term.
ridiculous.
There are few coins that really have potential, as Jesse already mentioned. I mean, EOS, BTS, Ethereum, Bitcoin Cash, Bitcoin. Those are long runners. There's a lot of shit, other stuff which just simply might die. And if you look at the chart of Wabi, for instance, I think it has only seen one direction since it was there. It just went down, down, down. It's now 20 cents. I think we bought Wabi for $5. You remember that?
Say that again?
Didn't we buy Wabi for $5 or something? It's now down to 20 cents or less.
No, it wasn't that much. At one point, I made a lot of money on Wabi. I think let's pull it up. No, it wasn't. It wasn't like that though. It was. I think it was up to like $3. Let me check.
Oh, $3. Yeah, well, it was dollars, not cents. Same as Luna. Luna was at $85 once. Now it's something like $4.
Lunar went up to $100 once. It was like it went up to $100. Like it got pumped up to $100, then it went back down to 50 like 24 hours later.
Anybody of you is in Bitcoin private?
Yeah, does anybody have Bitcoin private? Yeah, look at that. Wabi was $5.50. That's a pretty small drop, wouldn't you say?
Small drop from $5 to 20 cents?
Not too bad.
You should have held it.
Yeah, too bad I didn't hold it.
Yeah, you just needed 10,000% to get back up.
Let's see. Wabi went down. $96.8%. Way to go. Good job, George. Way to find a great, promising pick and tell all your members to hodl, hodl, hodl. You're a really good guy.
Awesome, isn't it?
Some people were like, I had to unfollow you because I didn't like, you were always like, talking other people down, like that guy with one of your competitors in another group. Like, it's not, you shouldn't talk about other people like that. Like, he could probably say the same thing about your group. It's like, okay, does anybody ever think that if something was going down 96.8% that I would tell people to just keep holding? Oh, just keep holding. It's going to go up. All right. Okay, guy. All right, let's see.
We're coming back to the Bitcoin private. I mean, Z Classic is now twice the price of Bitcoin private.
Yeah, I would really like Bitcoin private to go on a run. That would be awesome if that actually happened.
They actually introduced now this private pay now. So they approach merchants to accept Bitcoin private payment. But it's pretty low. I mean, probably worth a shot for $50 or something.
Yeah, we could really use some movement on that guy. I would even like Litecoin. I still have some Litecoin Cash. It'd be nice if Litecoin Cash actually started trading.
True.
I got a bunch of Litecoin Cash. All right, so yeah, with ETH to finish that out, I think ETH is great right now for the reasons that Nils just discussed. Plus, there's some other stuff. You can see there's the fundamental reasons that he mentioned. But looking at the technicals, I mean, this is an incredibly, this $400 to $410 is a very strong support. So when it dipped down in April to like 360, that was a short-term drop, but for the most part, the prior support was all very strongly correlated at that $400 mark. We had some rejections there, and we had a lot of support there after we came back down to test it. It wasn't until that other time. See, I mean, even over here, that range that's crazy. There. So I really, really like that 400 level. I think that's absolutely critical. The only problem I have here is that one drop kind of throws things off a little bit. Otherwise, it would be a perfect support to factor into our trading. Right here, I don't remember what happened then. I can't really remember what it was that caused us to drop so low on ETH at the time. But the following run was great, 135%. I was trading ETH back then, and it went very, very well. I think we can get a strong bounce. I think we could really move up from here. Yeah.
This is Oreo iced coffee.
Huh?
Oreo iced coffee that I got more time.
Let me pull up some MACD action here. Let's see. Hey. I'm curious to see if MACD gives us any sort of shift in momentum. Could be a very, very bullish signal. Got higher highs too. Creates a little bit of hidden bearish, but it's not significant when you have bullish divergence. So, let's see here. We never got over. It looked like we were going to see a reversal in momentum there. Based on MACD, it never materialized. Even the RSI was bouncing. We never really got it though. That would have been the perfect time to reverse and get a shift in momentum, but yeah, it never happened. So I think if we break, this is going to be key. If we get the strong bounce here, this could be a good entry just because it's at the bottom, right at the bottom of that trend, close to the support, but this is going to be a pretty steep drop from here. It's not too bad. So that supports at 5. The trend is a little bit before that, at 4%. So 5.5% could be a little bit of a steep SL. If your stop loss is, yeah, that's hard. If you were to get in a little bit cheaper, maybe at the bottom of this current candle, you could limit it to under 4%, maybe 3.5% below that support. You know what though? I set this support a little bit lower than I should have. I could have put it a little bit higher, closer to 400. So if this was at 395, say instead of 393, or even slightly higher, then the SL might actually work. So take a look.
Also, Ethereum is traded against dollar and BTC. It's something like a hybrid coin. Many people use it as a stable coin, such as BTC sometimes, but it also has very strong support in the dollar values. And if you look at the Ethereum BTC chart, it's basically just forming a double bottom. If you look on the dailies, it has been really much lower than 50,000 satoshis.
Yeah.
For really a while.
So based on this setup, if you were to enter ETH now, less than 4% risk would put you below a very strong support. So that would take you down to 392. I think 390 would be a better stop loss, but it's a little bit higher on the risk scale. Starting at entering now at say 408, going down to 390 would be 4.5%. I'd like to keep it under 4%, but that's a good potential trade. I like that. I think the timing is perfect. We're sitting at a very strong critical support. I think this could be optimal for a really strong bounce off of ETH. I even think if BTC does come down, ETH wouldn't actually go down given how strong that support is. It could definitely hold up in lieu of BTC dropping. Oh my god, you guys should see what I just did. I just put my fingers on the table and moved them around as if I was on the trackpad on my laptop. I was like, why isn't the mouse moving? So, this is the trade. This is what I'm doing.
And as I said before, I try to accumulate tons of Ethereum rather. So I thought rather buy some more now before it really goes up and you really have to spend a lot of money.
Yep.
I'm a bear actually. I usually make points in bear markets, and that's what I look for. I really don't need the money out in there. I don't care so much about the dollar value, about Ethereum or BTC values. And I don't see much more potential to make more coins at the moment.
It's a good explanation, right, Nils?
Just say, have to switch. I'm on the phone, so. And my kids are making noise here.
You should take him outside and shoot them. Oh my God, Jesus.
Alright, yeah. I mute myself, sorry. When you have an outside pool and it's at 37 speed.
No, it's okay. You don't care.
Yeah, but yeah.
Jenny won't let me name the kids Luke and Leia. All right, just posted that into short plays as well. All right. Let me just take a quick look at member picks TA. Who was it? Said they posted in member picks. Posted. Oh, Bitcoin. Freezer Man. So that's what you were talking about. Five. There's a 5-wave count there.
I also had a short look at it, but it's more currently in a less go below 6,007. I still expect to go once more towards a and a half wave.
You were breaking up there.
I said I consider currently in the fourth wave, the first. From an uptrend.
Yeah. So that would be. What's that? That's 40. It's a 4 hour. Let's go to the 4 hour. That's the 4 hour and going. You got to include like the dates on the bottom and everything, because I don't know how far back that's supposed to be going. So if you're doing that, if you're giving me a screenshot, make sure you do this. Make sure you include the dates. The most important part of any screenshot, if you need me to like look at something, make sure you have the top, which shows what it is, and the time frame. Make sure you have the prices on the right, and make sure you include the dates on the bottom. So you need to do.
I'll do that right now because I have the chart.
Okay. Yeah. Anytime anybody, just as a rule of thumb, if anybody ever posts a chart in member TA or anything, always do it just like mine, because I do everything right. I'm just kidding. I include all that data on my screenshot, so make sure you do the same thing, because it's helpful to have all that information. Otherwise, you're trying to figure out like where it is and all that shit. I could tell where it is because the screenshot he posted included the prior bottoms, but still, it's easier to have all that data.
I just reposted it.
Yep, better. Well, you went for the last one was 4 hour. This one's 12 hour. I was confused. So that would be So you were drawing yours like this?
Yeah, essentially, this would be like, that we kind of already started a downtrend.
Just to mimic what you had. Do something like that. Wave 5 would find more resistance here, but or more support there. So it would be a little bit shorter, but yeah, I think that makes sense. Wave 5 would be a little shorter than that, though. But that's pretty much what I expect. That's pretty accurate. Let's do this. If you're trying to figure out, like, on a chart just like that, and you're trying to chart that out, let's look at our support and resistance, because that's going to be key, and we have to use Fibonacci as well. So let's do this. Let's say this right here is going to be another support too. So let's count that out and say, all right, if we know that we're going to have several of these supports here, plus we have Fibonacci there as well, give us additional idea on where we can see support. You see how the 786 is exactly where that prior bottom was, pretty much. That fib level is on point. So I would do this. So, yeah, the only reason why that's off, let me show you, is the way you have it. You have, this would have to be a 5-wave structure, so we still need to move up from here. So the way you have yours would actually, instead of this being the start of wave 1, you would need wave 1 to start here on the correction. So it would go... Let me just adjust the levels because that's obviously all lower than I'd want to do. So if wave 3 gets down to 4K, wave 4 can bounce us back up. Not quite to that support. It could, yeah, it could go back up to there actually. And then we would finish off with wave 5 somewhere between 3 and 4K. 3K being the bottom and the most likely bottom. That's what I would expect if I was looking for 5 waves down from here. We have some strong supports in those places. Those are the strongest supports. So anytime you're doing a count, the reason why I said, everybody, you need to make sure that if you're trying to learn TA, before you learn how to use Fibonacci or Elliott wave, it's critical that you learn support and resistance. It's the most important tool you have in your arsenal. Fibonacci is a close second because Fibonacci is in and of itself support and resistance. But identifying support and resistance without Fibonacci is critical, and knowing what to make of that data is critical. So if you can spot a support and resistance on a chart without having Fibonacci, then you can start with that, then draw a Fibonacci retracement. And then when you have a confluence of indicators and you have Fibonacci matching up with your already established support and resistance, you would have a much higher level of confidence in the accuracy of those supports because they happen to match up with those fib levels. A lot of the time you'll see me, I always make a comment about how crazy it is that I can do this because I've been doing this for so long and I do it so often that I can draw out an entire Elliott wave count and then I can go in after the fact and do a fib retracement. And I'll have my waves are exactly on pace with that fib retracement. So I might draw it just like this, and then I do a Fibonacci retracement, and it ends up having like the 236 and 768, and they're all like exact. The end of each one of my waves is right on point with the fib. Like wave 3 is always like right at the 618. And that doesn't happen because I looked at it ahead of time and I spotted what the fib levels were and then drew it according to that. Obviously, I'm not doing that. I'm just drawing it freehand off the top of my head, and it just so happens to perfectly match up with Fibonacci. And the reason is, once you do it enough, it just happens like second nature. You just look at a chart, you draw a line of where you think that wave's going to end, and then sure enough, it ends up being exactly at the 618 when you do a fib retracement. That's why it's so important to learn those other concepts first. If you get those first, where you could just look at a chart and know where the support and resistance is without actually using any of those tools, if you can get to that point where it's that second nature to you, you'll be able to learn all those other indicators with relative ease. It'll be much simpler. It won't be nearly as intimidating or complicated. It won't take nearly as long, and you'll be a lot more successful. It's very important to learn the basics first, and the best, most important concept you can master is support and resistance. Huh?
As you said, you're much more confident. If your support, the fib, and the wave count won't match up, I mean, then you're really waiting just for something really fundamentals to change or some really big funding spread to crash that.
Yeah.
Usually, if your Fibonacci lines up with your support, with your Elliott wave count, you can barely turn off your computer.
Well, you can't turn it off because then you won't be able to watch, porn. Or, in your case, gay porn or horse porn. So.
Gay horse Jew porn, please.
Yes. Oh man, Jewish horses, gay Jewish horses are the best. All right, so we have potential count on that. We'll see what happens. I'm anxious to see if we get the bounce here where I expect it to. So I'm gonna watch this and we'll keep an eye out for it. Let me see. Where's my chart? Hold on. That's not right. Oh, no, that is right. This is my chart. Okay. I don't know where the hell I got the left axis from. Who the hell uses that? What the hell is that? Jesus. Why are there those two little boxes there? That was weird. And a random blue line in the middle of nowhere. It's like a secret treasure I found. We may be approaching shorting territory. Down at $1,600. Done enough TA on this chart. Still hovering right here, so we haven't made a decision yet. We'll see what happens if we get the bounce. Everything about the Bitcoin chart looks bearish, though. Just to be clear, nothing about it really looks bullish. Everything looks bearish. I like that the RSI is oversold. I mean, that's a sign that could lead to some sort of upward movement. There's very, very, very little of, if anything, on this chart that gives me any sort of confidence in Bitcoin. It's just I was normally, like, based on my analysis up until now, you guys have heard it enough where we're going to go up 1,000 to 1,500. We'll get back up into the low 8,000s, and then we're going to go back and resume our correction. That's what I've been saying for God knows how long. The only thing that's changed is all the news that we're seeing. That's the only reason why I think we might have another move up, because we're just getting so much positive shit put out there. It just seems like somebody wants us to move up. But besides that, I'm very confident we go down. So I'm happy either way. I'm not overexposed on any sort of plays or anything. I'm very conservative at the moment. I'm pretty safe. But sticking to USDT pairs eliminates any risk of Bitcoin dropping. If your coins drop in price and you get stopped out, you're back in Tether, so that's fine. And then you could always re-enter if you want to, because you could buy back cheaper. So if you get stopped out, most of the time, if you play your cards right and you know where to place your orders, then you're in good shape to re-enter. So think about what that means for a second, right? And we're gonna close this out. I'm gonna do some stuff. I gotta catch up on some other stuff, but just to close it out, I want to mention everything that we've been talking about, where I talk about USDT pairs and stop losses and support and resistance and how you need to master support and resistance. That tells you where to place your entries and stop losses. So think about what the takeaway is with stop losses. If you're in a trade and it goes down 5% and you get stopped out when it drops 5%, chances are, because you know where to place your stop losses and you placed your stop loss below a support, once it breaks that support and you get stopped out, that means it's going to keep going down until the next support. That's the point of these supports. When you break a support, you keep going until the next one. Look at what I have here, where I had this support here, and then we dipped down and bounced off of this support. And then we bounced off it again, and then we broke through it, and look where we bounced. We bounced where I said this is a crucial support. Nobody else had this 7230 listed as a support, just to be clear. When I said 7230 is a crucial support, everybody told me I'm wrong. There's no support to 6800. Okay, well, you're wrong, dick. There is, and I was right. As soon as it got down to this area, that candle got stopped in its tracks, and there's a tiny little wick that made it through, and that's about it. It wasn't until we moved on to the next hourly candle that we were actually able to break that support. Same thing here. I had another support at 7061, and we hit that 7061 price, and it stopped that candle dead in its tracks. And then the next candle was able to start another move down. So these supports are on point. Like, my support game is strong. So even if I'm wrong about stuff, the TA is right. It's just the market happens to be going down and I'm getting killed on some trades. But it's not that the TA is not working. It's doing its thing. So you can still learn from watching other people come up with analyses and everything, even if they're not necessarily making money on the play. And my whole strategy revolves around not having to be right every time anyway, as long as I'm very right sometimes. In this case, the supports are pretty on point, but the thing to consider is how it keeps dropping to that next support. So we broke through this one, we stopped, then we broke through that on the next candle, and we stopped at this support, and then the next candle we broke through that. It could be a few more candles later before we get down to this next major support, and then we might break through that. But chances are, most of the time, you keep going to the next support. So in this case, we've already done that. Every time we break a support, we drop down to the next one before we catch any sort of resistance on the way down. This time we happen to get stopped right here where I don't actually have a support noted, which is fine. My point is that since that's how it works, if you have your stop loss right below supports, then what will usually happen is it'll break the support and stop you out and then keep moving to the next support. So by definition, if you get stopped out, you have the opportunity to re-enter at a lower price. If you don't place your supports, if you don't place your stop losses properly because you don't know how to identify those supports, think about what would happen. You get stopped out prematurely. You end up getting stopped out back into Tether, back into Bitcoin from another trade that you're in. And now if you want to enter back into the trade because you still think it is a really good opportunity, you still think it's really bullish, you very well may have to pay more. So some people have said to me, your stop loss strategy doesn't work because I get stopped out and then I buy back in and then I just get stopped out again. Well, then you're obviously not doing it right, because does that happen to me? Like when I post plays, do those plays do the stop losses get hit and then we buy back in and then the next stop loss? Obviously not. Otherwise, I wouldn't be successful doing this. So by having your stop losses placed correctly, you give yourself an opportunity to get back into the trade at a lower price. So even on trades where you're really confident and you know it's going to go up, even on a play like EOS, I'm very confident on EOS. I love this trade. It's been moving up and it's been following the TA so on point so far for a week now. Or for 5 days now, that I really have a high level of confidence that it's going to keep moving up and do well. That being said, I have no problem placing a stop loss below a support and getting stopped out, because if that happens, I'm going to have a chance to buy it even cheaper, because most likely I'll be able to buy it at the next support down. Sometimes that doesn't happen. Sometimes it'll break the support and stop you out, and then it goes on a run for 15% and you missed out because you got stopped out. That's fine. I'm completely okay with that happening. I'm not pissed. I have no regrets. I'm not upset that I got stopped out and missed the run. I'm happy that my strategy worked. That usually doesn't happen, but sometimes it does. In the cases where I get stopped out and buy back cheaper, I'm very happy. So I'm willing to take the risk that every once in a while I may lose out. That's why it's so important to know how to place your stop losses based on supports, and that's why I so heavily emphasize support and resistance being the most important concepts to master.
Exactly. Because between the support and resistance, that's where you make money. No matter if it goes down or up. But if you're stopped out, it usually will not return directly on your stop loss. As just said, you stop down for the next support to be hit. There you can probably buy back in. If you're then stopped out again, okay, then we're back from one. But you made so much more money from the point where you stopped out the first time to the second time. You only lose the risk you're willing to go. So if you put your stop losses minus 3% or something, you lose just 3%, but that's it. But the windows between the resistance and the supports are much higher than just your 3%.
Word up. Yeah, you may lose 3% getting stopped out, but then you could buy it back another 4% cheaper. Now, when it does go back up and it bounces back, you made back the 3% you lost when you got stopped out, and then some.
You must be very lucky to put your stop loss on a reversal. Then you put your stop loss actually wrong.
That could work as a count. That could be fine. Winnie posted a chart. Yeah, that could be a working count. I like the other one more, but yeah, that's another possibility. drew it like this. So instead of, well, that would have to be, yeah, that would be 1, 2, 3. No, that would come down too low. Yeah, that's why I didn't count it that way. Because I would have had to factor in the beginning here. 1, 2. If it was just 1, 2, 3, 4, 5, then that would make sense. But it wouldn't be, because this initial move would have been wave 1. The 2 was the retrace. And if 3 went all the way to that 5, we would have retraced into 1 territory, which would have invalidated it. Then a huge run from there. That wouldn't work. Yeah, so Winnie, no, the one that you posted wouldn't work. Do you see why? Why I couldn't count it that way? All right, that's it. So that was cool. This went a lot longer than I expected, but it's all good. Did you guys like the setup now, where I had, where we sort of had everything scheduled? Now, keep in mind, I was saying how everybody left the voice chat because I was so boring, but and some people said no, it wasn't that you were boring. That's fine if it is. The stuff that we're gonna go over next time was we're gonna do a live stream tonight at 8. I'm not doing all this stuff though. It's gonna be a much quicker one, much shorter. We'll run through the basics again, but I'm not going over everything in detail like this. Next time, so this week, we're gonna do another scheduled one just like this, and we're gonna go over the actual trading concepts, especially for newer members. So I'm gonna have we're gonna go over actually finding support and resistance, sort of like I did today, but I didn't go over teaching you as much how to actually do it. So for newer members who don't have the skills and kind of need some exposure to that side of things, we're going to go over that. We're going to talk about actually setting stop losses, how you do that. We're going to go over how to use Fibonacci. So we're going to get further into indicators and charting. We're going to do a lot more TA instruction and a lot of stuff. So cool. So all right, great. If you guys think of anything else to include in the next one, let me know. I'll talk about it in the chat, and you guys can tell me what you want to work on and what you need to talk about, and we can factor all that stuff in. I can teach you absolutely anything as long as I know. If I don't know, then I'll just pretend to know and teach you nonsense. Or I'll just tell you that I don't know. That's probably more likely. Then I'll just say I don't know. All right, cool. Well, thanks for coming by, guys. I'm happy it worked out this time, and it worked well. So I'm going to stick with this new format, and if you guys give me some more ideas on how we can make it better, then I am all ears, because I want this shit to be the best educational group out there. In the meantime, I'm going to keep looking at some charts and see if I can find some good plays, and hopefully we can make some money. I'll let you know if I get into any trades. I am in that ETH trade for sure, so if you guys want to play it with me, I'm definitely in this Ethereum trade, and I'm still in EOS and BTS. And I'm waiting to get back into that Neblio trade, the NEBL trade. I got stopped out, but I have that new entry. If you look at the chart I posted in Short Plays, if we can go in a little run and get back up to that new entry price, that's where I would jump back in, right up here. New entry right here. See? So we're bouncing here. We have to break that 55. If we can break this 55 with some force, I'm going to buy in as soon as we pass the new entry, because then the only resistance we have is at 37.95. If we can break that, it could be a 10% run, no problem. So keep an eye on this one too. If you guys want to get into it, I'm about to jump in as soon as we break that new entry price. So I'll be in the chat still if you guys need me. But yeah, thanks for coming by, and I'll see you at 8 o'clock if you want to come back for round 2.
I'll give you a quick call now.
All right.